Yeah, I'm just going to speak.
Yeah.
First and foremost, traders, welcome to the official Algo Week Midsummer Blowout. We call this like an automation extravaganza, if you will. The consensus was over the last year or two is that, you know, we really needed to put together some deep dive training for all of the algo traders and the systems and the enthusiasts looking to kind of transition to automated strategy trading, etc. And we've realized that, you know, in order for us to do the type of justice that you guys deserve, there's no way we can just do it in one day, right? The aspects of automation is very different than indicators, right? It's very different than simple patterns and strategy concepts. There's a few moving parts to automation, right? So what we did was we waited for the right time, and we came together as a collective unit, and Jim and Jeff and our algo trading ambassadors have been working behind the scenes with our team to put together Algo Week, right? And it's probably the biggest event we've ever done in the history of the company in terms of education. The reason for that is that we're not actually doing this with any other vendor. We're not actually participating with any other speaker. It's literally our team, our core products, our education, our resources jam-packed over an entire week of trading education, system deep dives, strategy testing, template building, you name it. This is going to be probably the biggest event that we ever host. We may never even host an event this big ever again. It took a long time to put this together. So I believe, Jim, you've got some sort of an agenda you're going to map out with everybody over the next several days. I don't know if you're going to
Do you want to
present
go through
that.
that now? Yeah, we can jump to it now.
Sure, we can do the agenda. And just as always, you know, the disclaimer, traders, you know, we're not here to give you any advice. We're not your advisors, your CTA. We are simply here as an educational and software provider. And please type Y in the chat box that you know that you accept and understand the risks in the business so we can move forward like professionals. Yes? Fantastic. So we have a lot of systems, right? And we're just going to get right into it today, right? We're just going to get right into the meat. This is Algo Week, right? We've got a lot of stuff we want to cover. And many of you have come into our pipelines in terms of, you know, when you came in as a customer. Maybe it was 2 years ago, maybe it was 2 days ago. But we develop systems. We are constantly developing software and systems for traders globally, one of the largest algo development teams in the business. And over the course of the last several years, we've literally built almost 20 different automated systems, and we have many more coming. And so we wanted to pick a transition of many different types of systems, from trend trading strategies to breakouts to volume to order flow to reversals, to because it's not so much just one system we want to focus on educating on. We want to focus on how to take all of the different types of trading methodologies and break them down individually, talk about different ways to build, test, and automate them, different factors of trading around those types of strategies, etc. And it's really designed in a way to take you by the hand day by day, teach you different trading concepts and how to automate and optimize those types of methods. And if you see a strategy here that you're using, great. Or if you've looked at, great. If you see one that you're not, or that you wanted to use and we don't have it on the list, I assure you everything that we are going to do over the next 5 days will be more than enough for you to take that strategy and implement exactly what we're doing. Because I believe the way that Jeff and Jim are going to do this is they're going to walk you through the engine and how to build templates and test those templates for each of the different systems. You're going to see that there's a commonality, between all of the different processes, right? So the ATR Vol Trader is a volatility trend trading system. It looks at breakouts and trends. We've got a supply and demand breakout system. We've got, you know, the CWAP volume trend trading strategies. We've got the hybrid algo, which is going to be looking at the wicker. We've got the springboard, which is a capitulation system. We've got order flow on the HFT algo. We've got ready, set, go, which is a price pattern reversal system on trends. And then we've got the volume profile breakouts. Now, if there is time at the end of the events, I'm sure they'll be more than happy to go over any other questions on the other systems. But I think after this week, your brain is going to be spinning. You're going to be winning, and it's going to be exciting. Now, as you can tell, like, you know, we've really kind of skimmed here, right? We've really kind of just want to only talk about the basics. You guys asked for it. I'm telling you, we're going to deliver it, right? This is not a joke. This is literally the biggest educational event we've ever hosted. We're going to be covering all of these in detail. So grab a notepad, record the sessions. If you have to leave, watch the replays. But I promise you, when you are done with this, you can call yourself an algo trader. I can promise you that, right? So I'm not going to read these out word by word. I don't have enough time in a day to do that, but you guys can take a screenshot. This will be the agenda for the week. And if you see something in here that you're struggling with, if you see something in here that you're, I guess you would say, needing more help with, or you don't understand, or you want more context, write it down, right? You might be doing well in some of these areas, but you need assistance in others, or you just don't even know what they are or what that means, right? This is exactly why we're putting on this event, okay? So get ready for this. I think that's it, Jim. Do you have any more on this one? No?
No, that's pretty much it. And then we'll dive into the algos. Is there anything that you don't see on the list that you want to cover? Feel free to chime in the chat box. I think we covered everything. I mean, we've got a pretty good agenda for the week. So, but if there's anything else, yes, we are recording the sessions. Recordings will be made available on Friday. So just getting that out of the way now.
Sure.
Everything will be available Friday.
We're now, let me just end with this, guys. You know, I have spent a lot of time with a lot of you guys as customers over the years, and we know that, well, let me just go get out right and say this. We understand this business is expensive, right? How many of you guys would agree that the trading industry can be quite expensive? Yes, right? You're buying software, courses. It's a very expensive industry. It's a money business, right? This industry is very expensive, right? When it comes to buying evals, buying courses, buying software, especially automated systems, right? We understand that. We also know that some of you have bought one or two of our strategies. Some of you have bought a lot more than that. But what we've decided to do, and I promise you that this will be well received by the entire audience and the entire customer base, is that rather than try to sell you a strategy over this event, we've put together something so incredible at the end of this 5-day blowout that it'll probably set precedents for the industry. It's not a normal type of special or promotion or launch discount or anything like that. I promise you that we're not going to be selling you anything over the course of the 5 days. At the end of the 5 days, right at the end of the event, we're going to be putting together a massive opportunity for everybody to benefit equally. And I just ask that you stick around to the end. Make sure that if you can't make one or two of the days, or if you can only be here for one or a couple hours during the day, etc., that you are here throughout the week via recording. You watch the recordings, you chime in, whatever you have to do, but do not miss Friday. Do not miss Friday. I promise you this. Friday is the day that if you miss it, you can kiss it goodbye, right? Like it'll never happen again. I can promise you this. It's not some big pump. I'm telling you, we've done something that is out of this world. It's a way of saying thank you to all of the algo traders. It's a way of making sure that any of you that are, feeling the heat of how expensive this industry is, I assure you that it'll be something well received by the entire industry and everyone in here alike. So promise, how many of you guys are going to make sure that you participate all 5 days and you're going to be here on the 5th day? Give me a yes that you're going to be here on the 5th day. This Friday, I need to know that you guys are going to be here, be there, be square. Okay.
Oh, and by the way, there is somebody on Friday, but you do have to show up. Somebody on Friday is going to win every single algo.
Oh, shit. We're doing that. We're giving away every single system to one lucky attendee. You have to be there, right? So yeah, seriously. So we're going to be doing some crazy things here. Like that's a lot of algos. I think that's why like a couple $1,000 times 20, that's $30,000-$40,000 worth of algos given away, right? So let me explain something, guys. Jeff and Jim have been working for years with me in the trenches. You know, before we get started, can you guys just type a Y in the chat box that you appreciate all their hard work? They've been working around the clock to get this together. Jeff and his Algo team, etc. We're super, super excited. And oh, I almost forgot. Jeff, I know you're half asleep over there, brother. Maybe just inject some of that coffee in the veins for a second. I need about 2 minutes of your time. You have been working. So we brought in a team of Algo ambassadors. I'm assuming they're in here, or some of them might even be in here. Hey, Jeff, I'm not sure. I haven't checked the attendee list, but I think, you know, maybe you could give a shout out to their names. You know, the team that you're working with here, that would be really great. We've got a couple Algo ambassadors that have won Algo competitions with us that have kind of joined our forces as an Algo template team. Maybe you can thank them here, Jeff, and address them to the community.
Yeah, we got 3 guys that have been helping us out tremendously. It's Robert Kelly, Lennon Palacios, and Patrick Doe. And I'll check and see if they're in. Hopefully they are.
Great.
But yeah, these guys, you know, spend a lot of time cranking out, you know, optimizations for templates, and we should be able to, you know, share some good stuff with you all out here.
And if I'm not mistaken, Jeff, the whole purpose of the last couple of weeks of, you know, going crazy with these guys in the trenches is that you guys have been putting together a portfolio of templates to be able to give all the clients.
Yes, absolutely.
So
that is definitely happening.
So just so you guys know, everybody's been asking for templates, profitable templates, optimized templates on all the different systems. We brought a team together. We ran a competition across all of our clients. We found the best traders that were producing the best system templates across all the algos. We contacted them. We reached out to them. We asked them if they wanted to participate and join our team and work with Jeff in the R&D side. We've now been working with them, and they are literally building templates every single day for us to help give back to all of our traders. What a process that we have done to be able to give back to not just every. I don't think the likes of the industry knows the amount of work that my team has put in to be able to give back to all of you. So all I ask is that you do me a favor throughout this event. I don't ask a lot. I normally don't ask much. I like to give. If every one of you could go to Trustpilot, maybe Jim, you can find the link. And throughout this event, you could put some comments, some testimonials, some praise, just basically write some, you know, love in there about our Algo community, about ARC, about NeuroStreet, about our team. We're going to be giving you guys free system templates throughout this event. We're going to be giving you guys week training here. It really goes a long way. It helps the Google algorithms. It helps all of the newbies find a home, right? If for everybody out there struggling, they need to find a home, and you know as best as I do what it's like to not have good help out there. So if you guys could take a couple minutes out of your day and just basically write a couple testimonials, that would basically be very, very well received by me as the founder. And I really appreciate it. So how many of you guys can promise me, commit to taking the link and just putting a testimonial this week out for all of our people and everyone to see? Give me a yes in the chat box. I want to know if everyone's going to give me 3 minutes of your day. At least do that, and we would really appreciate it. Thank you. Now I'm going to check. I got an attendee list in here. So if I go in there and I don't see you guys putting those testimonials, right, I'm going to call you up. Be like, hey, I got you on record here. Thumbs up. All jokes aside, guys, I hope you have a fantastic event. God bless every one of you. You deserve it. And I hope that everybody benefits from this 5-day blowout. Take care, traders. You're in good hands with my team. And let's kick it off, guys. Algo week. Cool. Let's rock and roll. We got several hundred traders in here today. It's fantastic. It's going to be great.
Good
Thanks,
stuff.
guys.
Thanks, Sean.
Thanks, Sean. Yeah, if you guys have already posted a Trustpilot, don't post another one. What'll happen? I actually did that when I first started with NeuroStreet as a trader, and what they did is they removed both of them. So figure that out. I don't know how that works, but yeah, if you've already posted one, you're good. But if you haven't, yeah, please go ahead and do that. That'd be awesome. Templates. So engulfing just came out, so we won't be covering that one. However, if you do need templates, send a message into our team because I'm sure they'll probably look at putting something together. So yeah, good stuff. All right, so let's dive in here. So just some other groundkeeping stuff. Again, recordings will be made available Friday. We're putting them all on a web page that you can go to and watch them all and all that. So just based on the way that we decided that was going to be the most seamless way to get those out to you guys. So we'll get those to you. Templates will be made available as we have them. So each day we'll be covering a couple different algos, going through it. And as those are available, we will get those to you guys every day. Okay. Like I say, if you need templates for something else, let us know. We've got guys that are probably trading with them, and we could probably look at sharing the wealth, right? So, so why are we doing 8 different algos? Why are we doing this whole event? Well, it comes down to some of these algos you might have, some of them you might not. Some of them, one lucky winner is going to have all of them on Friday. Yeah, I will need voice steroids for sure. But the whole point of this is repetition, seeing it over and over and over and over, seeing that process through different algos in the process of doing this. We're going to look a lot into the theory of getting the algo to do what you want without expanding beyond the constraints of what the algo can do. There's sort of a happy myriad that takes place between what you want the algo to do and on which markets and what the algo is designed to do, but then also getting the most out of the algo, right? There could be, every trader could start at a different starting point, right? And let's say we're going hiking in the national park. Okay. We're going for a hike. There's so many different trails that you could take. Some of those trails might end up at the same destination, but there's multiple ways to get there. And the same could be for algos. One trader may want to use the engulfing on NQ, and another trader might want to use it on ES. And those two traders could find good templates for both of those charts, and they'll end up in a completely different direction. And that's totally fine. So it kind of starts with what you want the algo to do, and it ends with what the algo can do for you, if that makes sense. So what happens is we have to sort of come to some sort of consensus with the algo to where we now work together in harmony to be able to make money. Okay. So again, Friday, big blowout. The best deal that I have ever seen. I can't even call it a sales pitch. It's really just like, it's an insane deal. So come in Friday, of course, somebody's going to win everything as well. Best cool. Let me copy this. Bear with me 1 second. Could you send that to my email, Scott? Would love to look at that. My email is just jim@neuralstreet. Yeah. So good stuff. Appreciate it. Yeah, BXT. Yep, sure. Good stuff. Okay, guys, let's go ahead and jump in. So we're going to look at all the algos. We're going to go over the engine. And I think that's probably a good place for us to start, is to go over the engine and how that works. Okay. We're going to go over each system, the specific settings, optimizations, how to build templates, the step-by-step process. We're going to do portfolio building, intro to portfolio building. As a spoiler alert, we do have more coming along that line. And so this will just be kind of an intro to some of those concepts. Risk and money management. How do you do that? Selecting your time frames, prop firm trading, obviously, best practices on the algos, location-based deployment. What does that mean? And what does that entail? We'll look at that. Semi-auto algo trading, to where you're kind of intervening on behalf of the algo, and whether you want to do that or not. There's two sides to that coin. Pairing the algos with different markets, scalping versus day trading, slow versus fast markets, bar types, fractals. What the heck is a fractal? We'll talk about that. Fixed and variable bar types, runners versus all in, all out, break evens, trail stops, risk reward, higher time frames, velocity and momentum filters, reverse engineering. How do you do that? There's two approaches we're going to look at there. Sample size, data testing, understanding the metrics. What do they mean? How do you work with them? How do you make them better? Optimizations, how often do you optimize? When do you optimize? When is it time to re-optimize, right? Risk exposure, tolerance, max profits and drawdowns, high watermarks, setting up accounts, trade copiers. Okay, how many of you want to use a trade copier? News, fundamentals, conditions, all of that stuff. Okay, so we're going to look at it all. So here's something that I want to kind of present. Okay, so let's go ahead and dive in. I'm going to grab a notepad here. We're going to start with some kind of theories and, start with why, right? So what are some of the things that we need to know as algo traders? Okay, so what are some priorities that we need to have? What are some, concepts that we need to understand, that kind of thing? Well, the priority of an algo trader, like anything else, is to make money, right? Make money. The priority of the algo trader is to eliminate or reduce emotional interference from the trader, to remove thyself from the equation as much as possible. That is a goal of the algo. But think of it this way: we know things that we know, right? So some of the challenges that we could call them ahead of us. We could say that trading is hard, right? Hard to make money trading, right? We could say that it's a long game, and there's you either make money slowly or you lose money quickly, right? So it's a long game. So how do we prepare ourselves mentally for that? We could say, how do we get the most out of the trader, out of the algo? How do we get the most out of algos? Okay. So what that really comes down to is, look at it this way. If we know that trading is hard and we know that most traders lose money, here's my suggestion to you. Have proper expectations of what the algo does and what the trader does. Okay. So the algo, I would love this to be true. You turn it on and it prints money. Okay. I would love that to be true. I would love to tell you that the algos do not need optimization regularly and ongoing. But the reality is, if they didn't, do you think that we would be hosting this training event if it was that simple? Okay, so proper expectations. Understand you have spent money on the algos. And some of these concepts are going to be unpopular, but I need to be straight with you right out of the gate. There is a way to make money with the algos. I promise you that. There is a way. We have traders that are doing it. We're going to show you how they do it. And you're going to kind of open the eyes and go, oh, well, it's more involved than maybe I thought going in, but it's really not that hard. Okay. So you've spent money on the algos. You have either an account balance that you're trying to make money off of, or you're trading for a prop firm and you're trying to make money. So you've probably spent money on evaluation fees and all that kind of thing, right? So if you have spent the money and you are spending the time to deploy the algos, then if the priority is to make money, then why wouldn't you want to be the best damn algo trader on the friggin' planet? Let me ask you that. Shouldn't you want to be the best trader on the planet? If not, why not? Because you are here for one reason and one reason only, and that is to make money. So why not become the best algo trader out there? Why not put the time in to become the best? And what does that entail? Well, that entails optimizations. That entails reviewing the charts. That entails tracking your trades. That entails tracking what works and what doesn't. I assure you, the traders that are making money with the algos, there are some of them in the room here that are making great money with the algos. There are some that are not yet making money. We intend to fix that, right? But the important thing is to understand what you need to do. Do you need to sit in front of the chart and go crazy and bite your nails off and have all these emotions and all these things going on? No. Do you need to sit there and watch the charts like a hawk and wait for just the right entry? No. The algo is doing that stuff for you. Your job as a trader Your role is to figure out what your risk management models are, what your money management models are. You need to understand drawdowns and how to trade out of them. You need to understand optimizations. You need to understand which markets to trade on. And you need to understand, choose the right tool for the job. Okay. So this is your job as a trader. You don't have to enter trades. You don't have to sit there and click the button. Okay. All you need to know is you need to know how to deploy your system and how to get the best results out of it. Okay. Does that sound fair? Everybody on board with that? Who here wants to make a lot of freaking money with an algo? Anybody here want to make money with an algo? Great. That's what you got to do. Okay. That's what our winning traders are doing with these things. So we're going to dive into that. And that's why we're doing this, is to give you all of this, to figure out, okay, what, you don't know what you don't know, right? And that's where we come in to help fill in some of those gaps, and really just because there's only so much we can go over in a sales presentation when we launch these things. There's only so much we can go over in the AMAs each time, which is more focused on that specific algo, right? So this is supposed to be a comprehensive, all-in, everything you'd ever want to know about algos. That's what this event is. Okay, so we're really committed to that. And if there's something that you feel like you're missing throughout the event, feel free to chime in, because we want to give you everything, but there's a lot of moving pieces. So if I forget anything, please just let me know. Okay, so good. So now that we've got that out of the way, let's go ahead and dive in here. I think we've got everything covered so far. And by the way, there is no trade room this week for futures. If you're here going, I thought we were trading. This is the algo week. We're taking a break from the trade room. We do this during the summer when the markets are kind of slow anyway. And we'll go ahead and do this for a week and take a little break. So a lot of our traders trade with algos. So we wanted to make sure to give them an opportunity to learn, advance, grow, and so on. All right, good. Could use a break. Yeah, there you go. And market open's coming now anyway, so we wouldn't really be doing that much. We'd be going, hey, let's wait for market open. All right, ATR Vol Trader Algo. Let's dive into this. Actually, let's go over this, and then toward the end of the session today, we'll jump into the brain, okay? Because I want to go over ATR Vol is one of the algos that's not quite as updated as some of the other ones, and so I think it'll be better to go through the brains later. Okay, so which is the best algo? Yes. I don't know. It really just depends on what you want to do. There's a lot of them. It's like saying which flavor of ice cream is the best, right? Everybody has a different selection. Somebody's going to say chocolate, somebody's going to say Rocky Road, pistachio, spumoni, because why not spumoni? And, it's just everybody has their own flavor. So there's also right tools for the job. If you're a reversal trader, there are some algos that are going to work for you, and there's some that won't. Thrust Breakout is not going to be a reversal algo, so you wouldn't trade that one. On the other hand, you may look at the markets and say, well, the market is going sideways today, so I'm going to use this algo on that market. You might look at another market and say, well, this one's really trending, so I want to use the CWAP algo because it's a great trending system. But I'm going to start with a breakout to catch the first break of the day, and then I'll put on the pullback, right? So there's a lot of different things that you can do. I think the challenges with the algos is some algos will trade more than other algos as well. And so it might look like from the outside looking in that algo is the best because more traders are going to be passing evaluations more quickly because there's more trades. And that may not necessarily be the case. So I think they're all great. They're all great in their own ways. Just a matter of choosing the right tool for the job, which we're going to talk about a lot this week too. Okay, ATR Vol Trader. So we have this ATR. Let me grab my draw tool here. Yeah, right algo for the right market for the right day based on the right conditions. That's what we're looking at. Okay. Cool deal. So we've got this ATR. It's on sort of a stepping sort of average here. We can see this is going up, going up, going up. When it breaks through that system, this is kind of like it's actually a trailing off the low. And but when we break this this line, then that is a break trade. So that would be a trend break. Okay, so the idea is the market is trending, trending, trending. You get the rotation. You also get divergence a lot of the time, not all the time. But after that divergence, what happens? You're breaking the ATR. Okay. So I'm gonna give you this. Okay. If you don't understand divergence as a trader, learn it. It is one of the most powerful concepts in trading. Momentum divergence. Is it the end all be all? No, there's no such thing. But is it important to understand it? Yes. I can tell you that if you trade based, if all you did was trade based on momentum and divergence and turn the system on and off, you'd make a freaking fortune. I'm just telling you, it's that simple. So we'll go over that as a concept this week. You don't have to do it that way. It's just an alternate way to do this stuff. But here we could see clear divergence in momentum. If you're a reversal trader, you turn the algo on to go long and boom, huge trade, huge move. Why? Because the rotation is there. What about up here? You know, came up, kind of broke through. What is momentum doing there? That's a huge shift. Couldn't get any higher. We broke through. Huge trade to the downside. So clearly on this market for that day, reversals were a great opportunity. So this would be a reversal type of system based on a break. Okay. That's the best way that you could look to use it. We also have built into the system retest. So if you say, well, I'm not really interested in, you know, trading the breaks because I'm in a trending market, then you could trade the retouch back to the average. And then you take the trade off the edge and there's a great trade. Take another trade off the edge, another great trade. What is happening here in momentum? We're just talking about it. What was happening in momentum? Momentum slowed down. It's starting to creep up, went back down. Steady. There's no momentum. Momentum has been squashed. So you're not looking to trade short anymore because there's no momentum on your side, right? So yeah, the easiest way to use divergence is a good question here on the line or the histogram. Histogram is going to be the easiest. That's going to be the easiest, and it happens quicker. And it's actually, it's very similar to a MACD. You're probably looking at it going, oh, that looks like a MACD. This is actually our own version of an oscillator similar to a MACD, but this is it's dynamic in that it moves a little bit with the market to give an even better interpretation of the momentum. So it's really, really great. Yeah, we'll go over divergence for sure. Yeah, we'll definitely cover that. We could do that as we go through the charts. And for each algo, what I'll do is this, and let me make a note of this for myself. Each algo, we'll look at location-based deployment, which we'll talk about what that is in just a bit. We'll talk about momentum deployment. And we'll talk about fully auto, right? So we'll do that for each algo. Okay, we'll look at that for each one. That way you can decide how you want to trade. There's no one size fits all. Some traders, myself included, if I'm going to trade with an algo personally, now this is just my own personal approach, doesn't mean that it's better or worse. It's just better for me, right? Different flavors of ice cream. So for me, I would turn the system on and off because I understand the markets. I have a big picture, you know, mindset in mind on how I'm going to trade that market that day. So that would be my approach. Again, you don't have to do it that way. You can trade fully auto, and you can also trade a number of different algos together, which we're actually going to look at as well in another training event, which would be a lot of fun as well. So I'll give you both scenarios and you decide what you want to do. Okay. So that'll be great. So here we go. So we've got, you know, we're coming to the other side, and I really want to focus more on the trading end of the algos, not just, well, here's what the algo does. Here's how to punch numbers in a grid. You know how to put numbers in on a grid, for crying out loud. We want to look at the trading side of things, right? So here's the break. which signals that we are now long. So we notice that the average now moves below the market. And then we've got a long pullback, pullback. At this point, what do you see here? If I could draw a line, which I can't with a mouse, I'm sorry. Just not possible. Let's do it with my draw pad. Okay, what do we see here? Divergence. Yeah, this isn't volume. Divergence. So should we even look to go long here? No. Why not? Because divergence is starting to set in. Now you get away with it once. Usually you'll get away with it once. Not always. Usually you'll get away with it once. But eventually, once momentum starts flipping like this, usually there's at least profit taking, or it's possible that there's a rotation coming. Now, in this case, they just came back down. They tested these lows again, and it went up. How do you know that's going to happen? You don't. So what do? Nothing. Why do you do nothing? Because you don't know what is going to happen. You have no statistical edge in your trading because divergence has set in. Oh, but I'm going to miss that trade. Oh my God, if I could take 20 trades away from you, you'd be a freaking millionaire. Just stop trading so much. You don't have to make money. All right. So does it work on any time frame or lower time frames? Yes. I don't know. It's whatever you want to run it on. And we'll look at it. We'll look and see. We'll give different examples. But again, it's kind of a mixture of what do you want the algo to do and on which chart. And then, from there, doing what the algo is going to do. Yeah. Yeah. Can you take a moment and explain the chart? Yes, I will do it once we dive into the charts more. Yeah. All right. So here's some examples of some trades. Can you scalp with it? Heck yes, you can scalp with it. Quick trades, quick pops. There's some quick trades, right? A lot of quick trades. Personally, I'm not a scalper, so I'm not really going to focus too much on that, but we can look at the concept. The concept with scalping is, from a risk standpoint, think of it this way. How many scalpers out there? Anybody prefer to take lots of trades and real quick trades in and out? Some of the traders that are a nervous wreck, and that's totally fine. Everybody has their strengths and weaknesses as traders. Some of the traders that are nervous wreck when they're in a trade say, as soon as I'm in, I want to get out. And that's a scalper. Usually those traders do better at scalping. There are other traders that are a nervous wreck until they get into the trade. And then they kind of go, okay, they see it working, and they kind of settle down. So it's just everybody is different approach, right? All right, cool. So we'll look at different examples. So with scalps, the idea with scalps is more trades, right? Less risk. Why would you do less risk if you're doing more trades? Who can give me some insight on that? Somebody who understands risk management. More trades, less risk per trade. Right? Why would you want to do that? Because if you are, let's say you're trading on a 50K eval, and your trade is, you're 200 per trade. Well, that is going to work probably fine for somebody who takes 2 to 3 trades a day. But if you're taking 10 trades a day, probably not going to work. Why not? Because your max drawdown is 2,500, and how many trades at $200 is it going to take to hit? How many licks does it take to get to the inside of a Tootsie Roll Tootsie Pop? Not very many. Yeah, 12 trades with commissions included. Yeah, 12 trades. So if you're trading 10 trades a day, let's say you have a really bad day and your first 5 trades are just loss, 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 loss. Is that possible? Yes, it will happen at some point. Assume that it will happen. Have I ever taken 4 losses in a day? Anybody want to chime in on that one? Yep, I sure have. Some of those days, I luckily managed to break even because it just was a busy trading day. But yeah, and based on how you trade, you might say, I'm just going to stop at 2 to 3 trades, right? Maybe you like to be quick in and out, but you still only trade a few. But if you're trading 10 trades a day, that's not going to work. So you have to know that less risk is probably going to make more sense. You might be $50 to $100 if you're taking trades a day. So, cool. You have to be in a row. Yeah, exactly. Exactly. Cool. So we're good there. Scalper's dream. Okay, some different trades. You can trade based on moving averages. I just copied a bunch of the images from the system. So, all right, cool. And then we'll go over thrust breakout next as our next algo. And then at that point, we'll jump into the engine. So let's go into, let me get out of that for a minute. Is this the one thrust? Let's go here. Okay. ATRvol, 8 trades in a month. 8 trades in a month. That's what this algo template did. Is that a lot? No, it's not. That's probably something where you're trading a basket of markets. Hint. If you're trading one algo on one market and expecting to just light the world on fire with all these amazing results, the odds are not in your favor. Some days are going to be good. Some days are not going to be good. It's a long game. So how do you outrun pace when you only have 8 trades a month? There's 2 things you can do. You could trade another algo on the same market. You'd have to use a different account, or you could switch to a micro. If you're trading NQ, you could switch the other algo to MNQ and just size it accordingly. That would work. As a hint, you always trade the micros with the algos that are going to take less trades. Anybody have some insight on why you would want to do that? Who can tell everybody? Commissions. Yeah. So always put the algo that's going to take more trades on the larger contract if you do that. Okay, that way you're not going to get beat up on commissions. Yeah. Good stuff. Good stuff. Cool. So you can run another algo on the same instrument. You can run the algo on multiple different markets. Why wouldn't you want to do that? Again, trying to make money here. So run the algo on more markets, optimize it for multiple markets, trade it on multiple markets. Okay. Do it out of basket. At least a few markets is what I would suggest. And then some days the algo would do great on one market. Other days it'll do great on a different market, but it's a long game, right? All right, so let's go in and check this out. Actually, let me just pull up a chart. We've got plenty of time. I'm not in any rush. We're going to take our time and really go through this stuff. So let's go to, what was this one? MNQ, I think. It's going to yell at me. I think it was MNQ. If not, we'll change it. It's fine. MNQ on a 2-minute. So let's pull up a 2-minute. I don't even have that. Let's go here. Minutes. Dos. 5 days. Cool. It is volatile, yes and no. Volatile from the sense of a lot of ticks per minute, but not volatile from the sense that that you can yeah, you're going to get like beat up on it or something. I trade MNQ pretty regularly on a 1-minute, and I do just fine. So so here's MNQ 2-minute. Let's go ahead and pull up the strategy. So if you are new to algos, how do you put the algo on the chart and make it go? Here's how you do it. You go to this little clipboard looking thing. It looks like a NFL playbook. Okay, so you click that. Strategies. Okay, we're going to go in here and we're going to select our algo. And you could either hit add or double click. All right, then you're not going to mess with any of this stuff. You're going to go to template, load, and you've got this little template in here, and we'll pull it up. Okay. How do you get your templates into the correct folder? Okay, I'm going to show you that too, because again, we're covering everything. So if you are already aware of this, sorry, but we're going to go through it again. All right, so what you're going to do is you'll have it in your downloads, and it's going to download as a zip file. What you're going to do is you're going to open the zip file, and you'll copy it or move it to your desktop or whatever. But you're going to go to templates, strategy, algo. Okay, So this is the exact path. Documents, Ninja 8, templates, strategy, algo of choice. Then you just simply paste it in here. That's it. So copy it from your zip, paste it here. Okay.
Hey, Jim,
Yo.
we should also mention that that folder specifically for that algo will not be there if it's the first time you've ever saved or loaded from that. In other words, you have to load the algo on a chart and then open up the settings and click the template button at the bottom and click save or load. And that's what actually creates that subfolder.
Yep.
Then you have a folder to copy it into.
Yep. Yeah. So what I like to do, anytime I load an algo on the system, I'll pull it up on either optimizing window or the chart, and I'll just hit save as default. That'll create the folder that you could put it in. So you do have to do that first. So thanks for sharing that. It's a good point. Yeah. Cool deal. There are 2 modes to run the algo. Well, 3 modes. You have backtest, real time, or combined. Backtest is only going to show you the trades on the chart. Real time is going to trade the charts as well. It's only going to trade the trades. It's not going to show you the historical trades. Combined will do both. Okay, so what I'll do is it's sim. Always make sure you've got it on the right account, right? It's sim, so that's fine. We'll run it as both. So if it wants to take a trade, cool. We'll let it. Totally fine. It'd be cool to kind of see some trades come through. The other thing that you need to do is you need to hit enable. Otherwise, it'll show up. It'll be like, hey, I've got an algo on here, but there's nothing happening, right? So you have to go in here and click enable. There's a couple things that you can do with this too. If we go to new, let's see, where is it? Account data. Here we go. Okay. Let's go there. That's fine. I'll just do this one. Okay. So if you pull up a window, if you're an algo trader, do this, please. It'll make your life so much simpler. You go to account data, hit the little plus sign, and you're going to go to strategies. And what do you see here? A little button that says enable. Woohoo. Simple. Keep this up at all times so you can see if your algos get disabled. If you want to disable them really quickly, you just click that button, off it goes. Done and done. Problem solved. Cool. There's another thing that you need to know is that if you close trades, you go to your trade tab and you're like, I'm going to hit flatten all, right? You guys have seen that on your trade tabs, and it shows your positions. You could probably do that actually. Let's go to positions and you go to flatten everything. It's going to turn off all of the algos because the algos are entering trades. And if you're flattening everything, you don't want to be trading. So it will disable all of your algos. If that happens and you say, well, I didn't want to disable this algo on this market, you go back and you hit enabled. Okay. Super simple, right? It's going to make your life so much easier. I would say just have this ready to go all the time. Okay. All right. So it is enabled. We are good to go. Yes, these are recorded. Not a problem. Recordings will be out Friday. Does it work with Windows only? You can use it on a Mac, but you need to run Parallels because NinjaTrader 8 only works on Windows. Do you get support if there's any problem? Nope, you're completely on your own. Oh, of course. Yeah, absolutely. We got you. If you ever need help with anything, reach out to our team. They're very responsive. They're awesome. They will take great care of you. Most definitely. Okay. Let's see. No trades, no trades, no trades. There's one. Okay. So there was the lonely trade on the 2-minute. It was a retest. It was a retest trade. We're above the moving average. This is set to a stepping moving average. And then there's the trade. Didn't work. Kind of chopped around a little bit and then said, nope. Okay. So there's the trade on this one. Let's look at this on some different markets and different charts. Okay, so that is one idea. I'm going to go to a 1-minute here. A stepping moving average. Yeah, let's go through it as we go through the settings. So stepping moving average is a moving average that doesn't move every single bar. What it does is it only moves if that moving average moves by at least a certain price point. So let's say it's set to 5 ticks on NQ. What that means is the moving average will only step down or up if the moving average goes up or down by 5 ticks. The result is you get some smoother opportunities where it's not quite as responsive. So it's an added option. You know, some you might love it, you might not. All right, so here's what I would suggest. Let's go to a volume chart. Why would we go to a volume chart? They're a lot smoother than a minute chart. You see how the minute chart, you've got a lot of, you know, kind of bigger candles coming in that really stand out, and sometimes get pretty choppy, obviously, coming into market open as well. So let's go to a 1000 volume. And let's do this. You have ATM strategies pre-built. Well, it's all built into the algo, so you don't really have to do that. All right, so you see how this chart's a little more smooth. You know, the moves are smoother. If you're trading trends on something like this, probably going to be better to do a volume chart, in my opinion. But you can do whatever. We can look at it on a Renko too. Let's look at a Renko chart. So this is kind of the first starting point, is looking at, let's go to our Renkos. You know, what do you want the algo to do, right? This is kind of that discovery process where I'm just looking at if I'm a trend trader trading this system, then I'm going to look at it on one chart. But reversals, I may look at a completely different chart, and that might be a better option for me. So we're going to look at it both ways. So let's do that together. So on this, let's go 20, 40, and 16. Okay, so here's my Renko. All right. Again, completely different looking chart, right? Completely different. What I'm going to do is let's go ahead and show you can disable it this way too, but obviously the other way is easier. Let's go ahead and look at, so this one is doing retest signals. 1 max retest per break. Now let's go 5, because I'm just going to look at all of them. Minimum 3 retest bars, at least one's fine. ATR period, I'm going to go, let's keep it as 14 on a Renko. Multiplier 4, we'll just leave that. Band ATR period. Just leave that for now. I'm going to set this to 1 because I don't care about that yet. Entries. 2. Stop. So I've got, for stop, I've got ATR or ticks. I'm going to go ATR. Even though it's a Renko, the ATR will kind of fluctuate a little bit. We're just going to do an ATR, you know, let's do a 3 ATR. Let's see what that looks like. And then we'll go, target's going to be risk reward 1-to-1. Break even trigger, don't care right now. I just want to see the trades, okay? Stop loss, yep, cool. And we're going to start at 10 o'clock. And we'll go to, let's go to noon o'clock. Actually, let's go to 2 o'clock. Moving average, time frame. Okay, I'm going to go to, so right now, it actually says EMA, which is exponential moving average. Let's show it, but not require EMA. And the time frame, it does have to be minutes on this one. So let's go to a 5-minute EMA with a period of 20. Not interested in structure filters right now. And let's show the sub panel because I do want to see. I want to see it, but not require it. Okay. So we'll go through what these are once we get them on the chart. Okay. All right. Sweet. Don't care about profitability just yet. I just want to see the trades. So let's go back here. All right. So this is perfect. Perfect, perfect. Let's go back to 10 o'clock. We'll go to the start of the day, and we're just going to go in and look at what happened there's several factors that I want to know with testing the algo. The first thing I want to know, what do you guys think it is? Starting point. Let's call it starting point. First thing I want to know, is this the right chart for the job? What do I want to do? Well, for this one, I want to trend trade. Okay. And based on the trend trade, I need a chart that is kind of smooth and responds well to pullbacks. Okay. That's kind of my theory on building this out. So I'll just move that there. So it's still here. So here's our first trade. Clearly the market is bullish. We don't have any divergence. We don't have anything weird going on. The next thing I want to know after that is my entry location good? Am I getting in too early? Am I getting in too late? Okay. Early or late. Next thing I want to know after that is stops and targets. Are they too tight or too loose? So that's what I want to know. So it's a great location for a trade right here. We got all the way back up to the highs, but then it bounced. So this is too loose of a target. That's too loose. And the target's based on the stop. So the first thing I'm going to do in here is I'm going to go back in and I'm going to go adjust it. So we'll go back in here and we're going to disable it. And this time I'm going to tighten up my stop to a 2 ATR. And then I will re-enable it with my little handy dandy window. Okay. So that turned this trade into a winner, but it took a second trade, which was not a winner. How many trades should you trade at the same location? One trade. That's the correct answer. Only one. Yeah, exactly. So this broke down, but then it came all the way back up here. Actually, I don't hate this trade at all. I think it just would have been better off to take profit quicker. It almost hit target though. So I'm not going to really gripe too much about that trade. Okay. Instead, I want to look at this. Now we're back above the average that we have set in here, which is still a stepping average for some reason. Oh, because it's a 5-minute. That's why. Okay. Problem solved. All right. So we got above the 20 and then we pulled right back in. Beautiful trade. We pulled back in again. We got lucky on that one. We got a secondary. What was happening here? Momentum. So if you are someone who wants to use momentum-based deployment or semi-auto trading, for lack of a better term, what you would do as a trader is you would say, my gosh, I love this. This is beautiful. We got a little bit of divergence, but we're really still strong on momentum. And this was kind of a weak pullback anyway. And so, okay, so this trade, I want all in. So if you are a semi-auto, you're going to take this trade. But once you see that the histogram is dipping, you're going to go, nope, no more longs. I'm going to wait till it goes back to the shorts, and I'm going to look at taking shorts. Now, divergence is going to be a little tougher on the Renkos. So you want to pay less. You don't want to get too aggressive with it on Renkos. What I would say is use momentum more as the filter. This one was already starting to go green. The reason for that is this is a deep pullback. You know, dealer's choice if you wanted to take this as a semi-auto trader. Okay. We come back down, we came back to the average, and this time though, we've already flipped green, then we went back to red, but we did break the low. So is this a location you would want to take a short? I mean, I would, because you know, it went green here, but it worked out. And anyway, so that's up to you though. You know, you could use optimizations to do that as well. Yeah. But this is looking at it both ways, kind of playing devil's advocate here. You know, which way do you want to trade it? That's up to you. Yeah, for sure. Here's a deep pullback. You know, this is kind of a break. Got caught up at the lows. higher low retest, lower high retest, and then slam back down. Beautiful trade. So there's a couple different ways that you can look to use something like this. This one, you obviously had clear divergence. So are you looking to trade short here on a deep pullback that's breaking this? No. So if you're semi-auto, again, you're using this to your advantage. There's another one that went, kind of deep into the pullback. But Renkos are different. You kind of got to look at it a little bit differently. But actually, I like this on a Renko. I think it looks pretty good. So this is one way to look at it, right? Let's duplicate this chart and let's pull it up on a volume chart. There's two thoughts to, there's a question on, do you set algos to avoid news and that sort of thing? Yes. So major news days, CPI, FOMC, any of those major releases, you probably want to just not even trade the algos that day, honestly, because your back test and your optimization is not based on CPI day. It's based on the normal market conditions. Those are not normal market conditions. So don't trade the algos. Okay, that's my 5 cents worth. You're just not, it's going to be a coin flip. Are you going to make money that day or not? I don't know. Flip a coin. Personally, that's not an edge. Coin flip is not an edge, right? All right. So now I'm going to go in. Let's add the algo again. And let's load our initial template. And we're going to go in and modify the, modify this again. Max retest. Let's do 2, 1. That's fine. So let's go through the settings. I don't want to get super deep into settings for this event, for this week. It's more about the theory and the concept around trading with algos. If you need more insight on how these algos specifically work, just go and check out the AMAs and so on. And look at that, I'm in a trade. And make sure that is on sim. Hang on a second here. Positions, sim. Yeah, that's fine. Cool. So this one is on. Weird. It is enabled somehow.
It's the same account.
Oh, it's the same
Each other
account. That's
chart.
why. Yeah, it's this chart. Good call. I'm like, why is that working that way? That's fine. Yeah, so here you go. So, momentum was up, not very strong. You kind of got to zoom out to see it. You see how momentum is going lower and lower and lower and lower, and we keep dipping into the red. This wouldn't, if you're a semi-auto trader, you probably wouldn't take this trade. But if you're a pure algo trader, then obviously you're in the trade. Okay. Let's go back here. That's fine. We'll leave this, let it do its thing. Let me create another sim account just for the fun of it. Add sim account. We'll call this sim account 2. Okay. I got to disconnect and reconnect, which is going to disable my algos. Anytime you disconnect, it will disable the algos. Okay. How do you know what volume to choose? What you want to do is you want to look at based on your specific time that you're looking to trade. Let's say you're trading 10 to noon. That's your session. You want to look at what's the average volume during that time. You can use a volume ATR, like a volume average, and then you can kind of figure out what the average volume is for that session based on whatever time frame you're trading. So let's say you want to trade 1 minute, but you want to trade it based on volume. So you would pull up a 1 minute chart, put the volume on it and a volume average, and figure out what that average is going to be. So that's the easy way to do it. Back testing, you look at a chart, or do you want to? Yeah, we'll look at it. We're going to look at it on an optimization as well, for sure. So I'll show you what that process looks like. All right, so let's go into here and let's pull up our algo. Let's go back here, load. The first thing I need to do, though, before I get into how I'm going to trade this thing, is I need to see the chart. I just need to see what do I expect this to do, and on which chart do I want to run it on. So this is a little deeper than what we do in the AMAs. It's a little deeper. and that's intentional. Max retests, let's do 2. ATR periods, fine. Multipliers, fine. I'm not going to really change much of this. Bands are fine. I'm not going to mess with that. Let's do, that's fine. ATR on the stop. Again, we'll go with 2 seem to be a good kind of good point to start with. That's fine. Risk reward. Let's go 1 to 1. We'll keep our 10 to noon. And then I'm not even going to require an average because I'm kind of using the ATR vol as the average in this case. Time zone, it's always going to be your time zone. The settings will have the name of the time zone in it, so you can change the times as needed. But I'm on Eastern time, and so everything is Eastern time. Yeah. Require, nope. Show the sub panel, yes. I'm not going to require it though. And I'm going to enable, I'm going to save this as kind of a starting point as well, just so I have it. I'm going to have to keep doing that. Should be on backtest mode. Double check. Yeah, it's on backtest mode. That's cool. That'll keep us from getting distracted if it tries to take a trade. That's fine. Okay, zoom out. What do I see? Does the chart look pretty good? I think I like the volume chart. I think, like I say, it's a smoother look for, trading trends and pullbacks and all that. So here we got the break. Nice pullback here. Hit it twice. Good stuff. Our other chart, we had trades here, here, and here. Interesting. This one came back deeper, and that one worked. That one worked. That one worked. Worked. This one didn't. Good day. Let's go a little further. And we got 2 trades that are hitting. So this looks pretty good. This is the ATR vol trader. ATR volatility. I like this. I like how it looks. I like how it's responding off of the averages. It's responding. That's the first thing I'm looking at. Response. This one didn't respond. This one did. And some of these are obviously just blasting right through. So that looks pretty good. Now what I want to do is let's look at it on reversals. See what that looks like. So what I'm going to do is I'm going to enable the break signals and turn off the retest. Okay, so I'll just do that, hit OK, and then enable that. I'm not worried about P&L. I just want to see the trades. Okay, break trade, hit it. Break trade, hit. Break trade did not hit. Actually, that's kind of interesting to me. But I guess this had bottomed out here and it's kind of coming back in. That's interesting. Yeah, that one didn't work. Good looking trade though. That one works. That one works. That one did not either. Interesting. So this looks pretty good too. So I'm going to run with this chart. Now here's the beauty of this algo. Here's the beauty of it. If you're looking at this right here, right? Let's just break down what the market's doing. Are we trending or are we oscillating? Here's the beauty of this algo. It does both. If you are in an oscillating market, you probably want to trade reversals. So you would have one setting for reversals. If your market is trending, you have another setting for trends. On this day, you kind of came out of the low, right? Came up, you broke. At this point, I'd be looking to go long trending. So I would set my trending parameters up. And in this case, it didn't get a trade. But would I look to go short on a break? Well, it depends on what you are considering the market to do. So there's a couple frames of mind on this. One is you can just simply put a couple of EMAs on the chart. Let's go in and do that. So there's a lot of different ways that you can go about figuring out, are you trending or oscillating? And it's really up to you on how you want to go about it. There's no one size fits all. So I'll give you a couple examples on what you could do. Why do I only have one? 9, 20. Maybe I just can't see it. Let's zoom in. There it is. Okay, so if you have two EMAs on the chart, two exponential moving averages, and those averages crossed, then you are trending up. And if they cross back down, but then cross right back up, that's a sign that like maybe things are starting to rotate, right? Then you get the break. At what point do you consider it to be a trending market versus oscillating? Well, you can't really do, if you are a pure algo trader, you're going to look at it each day on a day-to-day basis. You're not looking at it as a, oh, I'm going to turn it on long or turn it on short or turn it on trends or turn, that's more for the semi-auto trader. The semi-auto trader might say, well, the EMAs are up and I like this location for a long trade on a pullback. That's what the semi-auto trader is going to do. You may not be that. You might say, I just want to run the optimization and run the algo that way. Great. What you're going to do then in this case is you're just going to zoom out, or you're going to pull up a higher time frame chart. So let's pull up a higher time frame chart. Command Q. We're going to go to a 5-minute chart. Okay, here's our 5-minute. So let's figure out first off, where are we at? We can probably add some days to this too. Let's add 20 days. All right, so let's say we are here. This is our day that we want to look at. Okay, there's our box. So coming into this on the higher time frame, what do you guys say our market is doing? Going into that session, are we trending or are we oscillating? What do you guys think? Just looking at the chart. We'll put our EMAs on here too, just for the fun of it. Oscillating, oscillating, oscillating. The eyes have it. We're all on the same page, right? Everybody's on the same page that this market is oscillating and not trending, right? So what do we want to run on an oscillating market? Reversals or trends? On an oscillating market. Look at the EMAs. See how they went down, chop, 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 chop. They keep flipping back and forth, back and forth, back and forth. That's an oscillating market. There's your answer. So coming into this day, you're going to trade reversals, not trends. Okay, so let's look at it now. So we've got our reversal template on, because on the higher time frame, we're oscillating. Reversal, hit it, reversal, hit it, reversal, stop, reversal, hit, reversal, hit, reversal, stop. So we have on the day 1, 2, 3, 4, and 2 stop outs. We're net 2 winners on the day at 1-to-1. That is a great day. Anytime I can end the day with 2 net positive winners, I'm about as happy as can be. That's a fantastic day. I'll take that every day, and twice on Sunday if I can, even though the markets aren't open, unless you're trading crypto. That's a great day. Okay, let's look at the next day. Let's see where we're at on the next day. So let's go into the session. We're going to box it in so we can just figure out where we're at. Did I miss it? Oh, that's the same session. There's only a few days. All right, that's fine. Let's go into here. So going into today, let's go back to our higher time frame. Moving. Okay, right here. What's our market doing? Trending or oscillating? What do you guys think? Oscillating, 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 oscillating. Yep. What about now? Trending or oscillating? Ruh-roh. How do you know? How do you know what to do? Over here, if you zoom out, it looks like it's trending, right? If you zoom in, it doesn't really look like it's oscillating anymore. We had an uptrend, and then we had a downtrend. We're kind of bottoming out in here. to me, this is a trending situation. Look at what the EMAs are doing. Up, kind of started to cross, but then went way up. Dropped. Kind of started to cross, but then dropped. What you're looking at is kind of how often are these crossing over. So, whoops, that's not what I want. So if we go in here and look at the crosses, right? So we got a cross here and then a cross there and then a cross again. And then, you know, that was kind of one big cross. And we got a cross here, it kind of chopped, but it didn't really cross again until here. So to me, this is a trending market. And I get that some of this is subjective. And so here's my thoughts to you is figure out what works for you. Always higher time frame if you're trying to figure this out. And how do you figure out your higher time frame? You want to multiply by typically 5 or 6. So if you're on a 1 minute equivalent of a volume chart, then you simply multiply that by 5 to get the 5 minute. If you're on a 5 minute chart, you multiply by 6 to get to the 30 minute. Okay, so that's going to be your higher time frame. Okay, so that's the best way to do it. So in this case, I say we're trending. So we would put the trending on instead of the reversal. So let's do that. So we're going to go here. I'm going to disable it. It won't let me do that if I got the window open though. So let's do that. Okay. All right, so we're going to go to retest. Now notice I've got all these massive optimizations and I've gone through and I've optimized this 20 times. No, I literally stuck it on a chart. I just put in some assumptions. These were already in there from the optimization originally. And I'm not trying to reinvent the wheel. I'm just trying to make money. So how do I use the algo in the best way that I can possibly use it? So one little input. Are we trending or oscillating? That's what I need to know on this algo. So that's what's going to work on this algo. So we put it on trends. What does our day look like? Oh my God, we're net 2 winners. Great. Take the rest of the day off. Tell your boss I said so. Hey boss, I don't need to work today. I made all my money trading. No. But you get the idea, right? Like you've already made your money. Take the money and run. Is this a good trending environment to trade a short right now? Yes or no? Is that a good environment to take a short? Can I get a hell yeah? Yes, of course it is. So we're going to set this to combined. Okay. Now let's see. Are we going to get a trade? I don't know. Am I leaving? I ain't leaving nothing. What are you talking about? Who's going somewhere? I ain't going nowhere. Cool. Break up to. Oh, I'm up 2 trades. I'm out. No, I'm kidding. No, I'm not going anywhere. All right, guys, I'm going to the beach. That's a long drive, man. Actually, there is a beach. It's just not the ocean. There's a beach a couple hours away. Go to Lake Michigan. That's pretty nice. Yeah, so, you know, we broke through. Again, semi-auto trader might look at this and go, man, we just topped out in here. Momentum is weak. We did a liquidity sweep. I'm all in on this break trade. And you would have got a nice little break trade right there, assuming it met the other filters, criteria, and so on. But okay, so we're coming in. We do have some divergence down here, right? Got a little bit of divergence, kind of went lower, kind of starting to diverge a little bit. We would have to break above this high to get into that. So if you're a semi-auto trader, that might make you squeamish. And you're saying it's starting to kind of chop a little bit here, right? Maybe I don't want to take that trade. So you'll kind of look at it and go, okay, I'm going to manage this trade tightly. This is real-time auto, semi-auto trading. You're going to look at it and say, man, I don't really want to test my luck. I'm going to give it a little push. As soon as I get that push, stop goes to break even. So I'm going to protect myself on the trade to make sure that I'm not going to lose. Okay. So now we've got our target is down here. Next question I'm asking as a semi-auto trader is, do I like my target? I think personally, I got room to get a couple more ticks. So I'm going to move it down a little bit. So I'm just going to leave it like that. So there we go. Let's see what we get. And it looks like, are they coming for the stop? Or are they going to keep going? Remember, if you're trading trends, trade a trend. Don't trade a, well, I hope it works. No, it's either a trend or it's not, right? Like this is a deep pullback into an area that it's already pulled back in. How many times do you trade the same location? Once. Don't trade the same location over and over. The only saving grace we have on this is that this closed below that. If this had bottomed out here and then came back, you're screwed. There's no way you should ever take that trade. Okay. So this is just some trading concept kind of laced into that, but that's how this system works. Let's go in and let's start looking at an optimization here. Okay. And we'll go through that process. Are you guys learning some stuff here? Are you guys enjoying this so far? Is it completely over your head? Are you kind of getting things? Let me know where you're at. Okay. So I just hit my trade. So I'm just going to go to off. And I just turned it off. I got my trade. So I've got 3 winning trending trades. 3 wins. Let's go. It's good stuff. All right. Cool. Let's go to optimization. Now, this is just one example of this algo. I like it on this chart. I just pull up a couple different charts. What do I like better? I like the volume chart better. I think reversals, if you're doing semi-auto, reversals out of divergence could be good as well if you're doing semi-auto. And you could put that on any chart for that matter. So again, what do we all want as traders? We want less time involved, more money, more winning trades, more consistency and profitability. How do you get those things? Be smart about it, right? Be smart about it. Make it look so easy. Sorry, guys. I know I try to make this as practical as possible. I try to give you as much as I can on what I'm seeing. Here's the thing is like, I see things maybe because I've had a certain way of looking at it for years and years and years. So know what that is for you. Whether that's, I'm going to use the EMAs, I'm going to use a higher time frame chart, I'm going to use an SMC indicator, I'm going to use a structure indicator. Do something that tells you what your market direction is. There's no right or wrong answer to it. So just pick something that works for you. Yeah. Yeah, it does show data lag, which is pretty cool. Yeah, I do like that. All right, so we've got a back test. Let's pull up my starting point. And we'll create a template for trending and one for reversals. Okay. That way you can go, okay, this one's going because it's trending day, because I looked at my 5-minute and it, all that like we just did. All right, so we've got that. Actually, I'm going to move this over so I can see. So retest. So this is going to be our trending environment. Now, here's the thing. Here's the thing about this. If you have 2 different settings, the algo doesn't necessarily know whether it's a trending or an oscillating day. You kind of have to tell it that, right? And that's something you just do at the beginning of each day. So when you are optimizing these templates, you don't want to get too deep into the weeds, because here's the thing. If you optimize trending on the entire chart, well, we know that 4 out of 5 days are oscillating. Okay, so if you optimize the trending and you overly optimize so that it works on trending and oscillating days, you've already lost. This is sad face, dead eyes, not happy, square face. Okay, so not so good. So if you're doing it this way, then I would say don't optimize too heavily if you're going to deploy it based on what you think is going on for the day. Okay, because you're going to be kind of setting yourself up for a losing battle. Yeah. That's awesome, Scott. No, I can appreciate that. See, this helps avoid analysis. Yeah, exactly. Exactly. So, okay. So what I'm going to do here for Scott and for everybody that wants because I can totally appreciate that. You need something that's rules based, and I'm huge on that, and you guys know that. So let's make a note for me to do trending versus oscillating day. And we'll go into that. Okay. We'll go into some stuff because we want to get you something that works. Yeah. It's like, well, you can use any tool to do the job. Well, a hammer is going to work better than a shoe to drive a nail, right? Will a shoe work? Sometimes. Depends on what you're driving it into and how strong the shoe is. You can use it in a bind. So, yeah, exactly. No, I'm 100% with you on that. No, that's totally fair. And let's give you some rules. Optimizing. Oh, God, Lance, stop it. It's a good idea. Okay. The algo doesn't do everything. This is where we get into what does the algo do? What does the trader do? Okay. I wish the algo could do everything, but alas, we are not there yet. Give us a couple years. We'll get there. And be like, the algo did my laundry. What the heck? I know we built that in. We figured, you guys would rather be trading than doing laundry. We figure that out, then we're going to be in good shape. All right. So anyway, going back, I ran off on a tangent. That's going to happen because you're with me for 3 hours every day. And by the end of Friday, you're going to be like, man, this guy, Jim, he's out there, man. Welcome to my world. All right. So let's get into it. So we're doing retest signals, max retests. I don't want to trade more than 2. Why would I want to trade more than 2? Because how many times should a market pull back into a trend? 1, 2, 3, 4, 5. Elliott wave theory. How many pullbacks we got? 1, 2. So should I trade more? Only if you want to. Am I going to optimize for that? No, I'm not. Minimum 1 bar outside the retest. What that's saying is that how far is it going beyond the break before you can trade a pullback, right? So here's our break right here. So once we get 1 bar, that's below that, then it'll start allowing us to take trades. Okay. You just don't want to see it where it's like, okay, I broke right here, and then it comes right back in and tests. Okay. So that's what that's there for. You want to have some follow through. ATR period. How quick is your ATR? How many bars? ATR multiplier. Jeff, I'm gonna phone a friend on this one. Lifeline. What's ATR multiplier again? Is that how quickly this changes?
So yeah, there's 2 of those. So the first one is what it takes for the trend line that's below to flip to above. Like it's a trend change.
Okay.
That's the first one there.
Yeah.
And then the second one is it dictates how wide the band is around that line.
Okay. So the second one
that?
is multiplier of ATR. So it's 1 above and below 1 ATR.
Yeah. I mean, it's just the bigger the number, the wider the band.
Yes. Okay. And then the ATR period on the band is a 7.
Yeah, there you just happen to have it set to 2 different periods. The first one is 14, second one 7. They could be the same, or we just made it different in case you wanted to do that.
Yeah. All right. Good stuff. So ATR period multiplier. Cool. Let's we'll just leave these as they are. And then stop is also based on ATR. So this is purely ATR based, right? It's all based on the ATR. And then risk reward is 1. So literally everything you're doing is based on ATR. Now, why would that be a good thing? Anybody want to chime in on that? Why might that be a good thing? It's because it's based on market volatility, right? ATR is based on market volatility. So if you are based on market volatility, then you're only taking trades when the market has the appropriate amount of volatility for you to be able to trade it. Now we're talking. In other words, if the market's moving, you're taking trades. If the market's not moving, you're not taking trades. That is the major feature of why this algo was developed and why it's great for what it is. So, is it the best algo we've ever developed? I don't know. I can't answer that. I don't know which one is the best. They're all great in their own way, if you use them in the way that they are intended to be used. It's funny. I'll share a story with you. This is a perfect example, prime example. I've been doing webinars for NeuroStreet and ArcAI. I've been the main webinar presenter for, I don't know, probably a couple of years now. And when I first started doing webinars, it was on indicators. And I did a webinar one time, and I always come up with some kind of strategy for each algo, or for each indicator. When I was doing those, I would come up with a strategy that's something that you can use day one trading with it. And so I put together a strategy, and Sean got me on the phone, and he's like, Jim, what on earth did you present? It's like, this is ridiculous. Like, you went into this whole thing on what this indicator is not even designed to do. Like, you need to use it for what it's designed to do. Don't use it for something else. We have a tool that can do what you wanted to do there, but it's a completely different tool. So don't do that. So that was a wake-up call for me to be like, okay, you use the right tool for the job, right? Hammer or the shoe. Okay, so anyway, that's my little story there. So I had to correct that. Anyway, stop. That was fine. Cool. So do we want to require VM histo? On this chart, I think we do. I think we do. But we also had some deep pullbacks that were pretty good. So we'll optimize for that. We'll optimize that. But let's go ahead and, so as a starting point, we're going to pull in MNQ. We'll go to our volume chart 1000. The reason I use 1000 volume on MNQ is a little faster than a 1 minute, but it responds really well. So we'll do that. And then let's just run the initial back test. I'm not going to do any optimizations yet. I just want to see the back test first, and then we'll go in and optimize. So let's let this thing run through. I think I've already got the data, so we're good there. When you're running a back test for the first time on a different symbol or instrument, what you want to do is you want to go into your historical data and you want to download the data. So what you do is you go here, we'll go to MNQ, and I would just go to like May 1st so that I have all the data. You do not want to download minute data. You want to download tick data. Okay, tick data. Last, you don't need bid and ask, just last. Tick data, and then you would hit download. Okay, so do that every time you're looking to do a new back test. Okay, so already out of the gate, I'm not worried about dollars and cents just yet because I haven't sized my positions. Okay, I'm doing this on purpose. But I've got about a month worth and about 100 trades. Yeah. I got a comment here. Let me read this real quick. Yeah. No, we won't change the time. However, we are recording it. Yeah, for sure. Watch the replays for sure. Yeah, the good thing is, like I say, we try to do this in the summer when it's not as busy in the trading markets. So cool. So 109 is what I'm looking at here. 109 profit factor. Drawdown versus profit obviously is not where we want it to be yet, but I've got about 100 trades to work with. So that is a great starting point and something that I can run with. So now I want to go to the chart and just look at it again, go back through. Good trade. Yeah, I don't hate that trade either. It just didn't work. So that's great. Again, what am I looking at is entry, and I'm looking at, is it a good entry? Is the stop and target too loose, too tight, so on? It looks like I've probably got a little more breathing room. Looks like the stops are kind of right at the edge of the other side of the channel, which is great. That's actually kind of what I want, which makes sense because I have an ATR2, and the band is set to ATR1 on each side. So, obviously it makes sense. That's a great little trade there. Yeah, these are some good trades. I'm not crazy about that one because it's the same location and it didn't work. So maybe we filter it to just say, one trade per direction. I don't know. We can optimize for that though. Yeah. Well, this one's set for trends, and I will use a different template for reversals. But then this one got choppy, right? This is kind of the same location, multiple trades, win, 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 win. So I don't know. It's interesting. All right, let's go ahead and optimize. I like what I'm seeing though so far, so I'm not going to go too deep into that. Let's go to optimization. Let's go to summary. don't think I really changed anything, but I'm going to go ahead and load the template again. Starting point. And then, yeah, we should have all of our numbers in here. So max retest signals. Let's go 1 to, let's go 1 to 5. Let's go nuts. ATR period and multipliers. I'm not going to mess with that just yet. I thought I changed this stuff. Hang on. Template load. Huh. Yeah. That's weird. Stop pulling over my numbers for the optimization. That's kind of annoying. I hear you there. There it goes. Okay, now it's working. Okay, so let's enable retests. Yeah, that's fine. We're not going to optimize that. Let's go 1 to 5. Not going to change anything else yet. I just want to look at each thing kind of separately first, and then I'll go in and start messing with it. And we'll go to max. I always prefer to do max net profit. That's just because what'll happen is you'll get one that's like max profit factor and you'll have 3 trades and they're all winners. And you're like, well, la-di-da, I only got 3 trades, right? All right, so let's run this through. We'll give it a second to do that. Okay. So what we'll do is we'll get through a quick optimization. I'm not going to go real deep into it because we're going to be looking at optimizing all week, and you'll see some different approaches for that. I want to leave us some time to go over the brains of the algo for the end. What kind of computer? This is a Falcon computer. I've got 64 on the RAM, and then what do I got for system? System components, is that it? I don't know.
Just type system info.
System info. Info. About your PC. That's probably it. Yeah, the Ryzen 7, 8 cores, 3800. It's actually, the processor is actually getting to be a little bit old now at this point. Yeah, 64 gigs. It's a decent computer. I've not had any issues with it whatsoever. It's been awesome. So it's probably getting to be a 2-3 years old now though. So I might have to look at selling this one to somebody and then buying something else. Yeah, so this is a lot of trades. So that's a good starting point. I've got a lot of trades to work with. 3 was giving us the best result on the retest. Eliminated some trades at 2. Profit factor is about the same. So this is one where you kind of got to look at like, So I used to buy Falcon Easy Micro Center Warehouse. Oh, Micro Center Warehouse. Interesting. I'll have to look at that. We get, as employees of NeuroStreet, we get a really nice discount from Falcon. So it's pretty hard to beat, but I think that's good to know for everybody else. Micro Center Warehouse. So that's cool. Thanks for sharing that. You have to switch to strategy analyzer when I change the settings from your chart. You cannot optimize from the chart. You do have to optimize in here. Yeah. So that won't work for you. All right. So let's go with 3. We'll just stick with the 3 since that was the best. And minimum retest, I'm just going to leave it at 1. I don't really need much more than that. ATR period, not going to really change it. ATR multiplier. I think this is actually for the break trades, isn't it, Jeff? This is for the breaks, not the retest. Go 2 to 4 by 1. We'll just see what that does. Jeff,
Sorry, I was on mute.
Oh,
yeah, the first one affects both. The second one only affects the trend rates, the Yeah, the trend rates.
Right, the band. Yeah, that makes sense. Okay, no, I get that. That makes sense. Multiplier 2 to 4, and then band ATR. I don't know that I really want to change this too much. Let's go 7 to 14, but we'll go by 2. Let's try that. Cool. So I'm just gonna test these couple things. I'm not gonna mess with that just yet. Let's do this separately. I like to optimize everything separately. I don't like to get too much into where I'm putting tons of parameters in and I got like 500 back tests. And, I just don't prefer to do it that way. You can do it either way, whatever works for you. Okay, so while this is running, this is good. So if you guys have any other concepts or techniques or things that you want to look at, we can do that while we're running, some of these optimizations and stuff. So let's look at it. Let's go into a 5-minute.
I'd like to say something about that.
Yeah.
The two different ways you can optimize 5 parameters all at once or one at a time. There's advantages and disadvantages of both. So the advantage of 5 at a time is that, I think there is some interaction between parameters. So if you optimize several at the same time, you're kind of getting probably a better optimum output. The problem is that that takes a lot longer to do. And so you might wind up wasting a whole hour or 2 hours of your time running through 500 iterations if one of the ranges wasn't really a reasonable range. So, the advantage of doing it the other way is that it's really quick turnaround between each step of the process, and you're just not risking wasting time. So it's what is more comfortable, right?
Yep, makes sense. It's running through. It's just finishing up now. Yeah, for sure, Daniel. Yeah, that's a good point. It's a bit above my head to be honest with you. Yeah, so but they did redo how the back tests work. What it's doing is it's plotting out tick by tick versus bar by bar. So they're doing tick level, up tick, down tick to do the back testing. And so that's why it works a lot better. Volume as a ticker. Volume charts are going to be a lot smoother. They're a lot easier to work with. Yeah. 20i7, 13700. I probably do need to upgrade. I don't run algos a lot though. So for me, it's fine. Jeff does all the optimizations. He's got like 20 computers. It's like his office is like 300 degrees because they're all like computers are running, fans are on. Like he's got like coolers and the whole thing at this point.
I'm not looking forward to this summer.
He's got glycol chillers and like a walk-in fridge.
I think my feet are in a bucket of ice.
Oh man, so funny. All right, cool. So this one, really no changes, right? 7 was the best. That's what we were already using. 4 was the best here. It's what we were already using. So no updates there. That's fine. ATR period multiplier. We just tested that, so that's fine. Multiplier, I don't really want to change, to be honest with you. So, I think this is really kind of the setting to use. We can look at the stop loss and just see what we need to be with on this here. So let's go by 0.1s. I will go 1 to 3 just to go extreme, and we'll see what comes out as the best. We'll get a lot of trades to sample, so that's great. We can look at time of day too to see if we can expand it or contract it a little. We'll check that out too. Yeah, other than that, I really don't have much that we need to do here. So let's look at another concept. This is, this is an idea on figuring if you're trending or not. The idea, and this is a little bit of a later analysis, but that said, you're also on a 5-minute chart, so it's not like it's going to take a super long time. So let's go in here. So we've got, if we're coming into yesterday's session, and let's say, you're getting to the market open, what I have here is I have 4 different EMAs. Okay. And I'm just throwing them on there just for the sake of the demonstration. But yeah, you could use different colors. When the EMAs are all one on top of each other, 25, 50, 100, 200, they're all up. That's a trending market. Once they start flipping and they're not, sequential, I guess is the word, then you are in an oscillating market from here to here. As soon as you get down here, you're trending again. So if you were coming into this day right here, based on that, you would set it to oscillating initially until you get the crossover here, and it's kind of freezing up because I've got the back test going at the same time. Yeah, for sure. No, I like technical too, because I don't like to have to be subjective when it comes time to trade. When I'm trading, I'm not thinking about it. I'm not going, what if that, if this. It just won't make you money that way. Yeah. I mean, you guys can all pitch in and buy me a new computer. I tell you what, all that money you guys are making, then you can be like, hey, Jim, I got you this coupon for a computer. I'll be like, all right, well, that's pretty great. Yeah, good stuff. All right, so let's check on our back test. So it's still running. But yeah, so that's one approach. It's technical. There's no guesswork. Are the EMAs all down? Well, that happens right here. At this point, they're all down, so you're trading the trends. Yeah. And then as soon as you cross over here, you're oscillating. And notice how the market is already kind of started to go oscillating for a while. By the time you get here, you can see how the trend ends right here, right? The trend ends. And then how do you know it's oscillating? Another way to look at it is you bounced off the EMA, right? But then you came down and you double bottom. And that's the sign that the trend is over. When you can't make any more lower lows, your trend's over. Okay. So, oh, cool. Yeah, you're right there with Falcon. Yeah, those guys are great. Yeah. So this is a 25, 50, 100, 200. Well, backwards, 25, 50, 100, 200. Yeah, and that's this one concept that is generally accepted in the market of trending or oscillating. So that's a great way to do it. I think this would work pretty well. Test it and see, check it out. Maybe it just needs to be on the same chart. Maybe it doesn't have to be higher time frame. I don't know what that answer is for you, but this is one idea that you can test and see if that's what works for you. Another thing that you can do, let's get rid of these and we'll look at another idea. The other idea is using structure. Okay, so we're going to go to swing strength 3. Structure. So just looking at what is the market doing? Is it making lower lows? Yes, yes, yes. Technically no, but that's kind of an inside pullback. Yes, yes, no. When is your trend over? Right here, because it didn't make a lower low. And then it came all the way back up into the high. So what do you think is going to happen when it comes back into the high? Well, we technically don't know, but the likelihood is either we're going to get a lower high retest or we're going to get a liquidity sweep. How do you know if you're going to get a liquidity sweep? You really don't. The best way to know if the market's going to respond to an area, I know I'm kind of going off on a tangent a little bit here, but if the market is unable to break here, which it wasn't able to break, what it's doing is it's testing liquidity here. Okay. It came in, came down, tested liquidity here. Rut-row. It hasn't broken either way. That's your sign. You get 2 bounces, 2 bounces, That's an oscillating market. What happens after that? Bounce 3, 4, 5, 6, end of day. Finally get the break. Did it really break? Not really, because it hasn't broken this. These are all inside. So I'm looking at what was the last outside pivots. Well, this was our pullback. This is our low. Anything that happens inside of here is an oscillating market. Does that make sense? This is a way to look at structure. It's a little bit more involved. It's a little more advanced. But if it's unable to create a lower low, and really what it is you've got a deep pullback, and then you've got an inside leg. Anytime you see an inside leg, which is this right here, inside leg would be, and we teach this in our gap program, lower high to higher low to lower high. Either of these scenarios is an inside leg. This is your sign that you're oscillating. Right there. As soon as you get an inside leg. Make sense? Let's go back and look at another example. There we go. Here's our low. Inside, inside. Obviously, we're oscillating. What was the last move that was kind of a trend? Well, it's really this one, because this is higher high to lower low. Okay. Then what happened? Inside, inside. Barely. It's a double bottom break. There's our trend. 1, 2, 3. Deep pullback. Didn't break. Barely broke. That's a liquidity sweep. So if it barely breaks, what happened here? Lower high. And then we came down to a double bottom. Inside leg. Oscillating, 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 break. But I really want to, for this market, I would really want to break outside of that. You know, trends inside of a big leg like this are useless, completely useless. As soon as we get outside of this leg, now we're trending. And what happens? Pullback, trend, inside, inside, deep pullback, inside, inside, break. There's a little period here where it oscillated, but it's also middle of the night, which is why. Trend, 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 trend. If it doesn't break this high, that's the first sign that your trend is over. Okay. So that's two ways to look at oscillating versus trending. I think one would work. It's a little slower. This is going to be the structure method is going to be a little faster, a little bit more reliable, but it's also more complex. So two options for you. Does that help? Good stuff. Cool. Awesome. Awesome. All right. So we're starting to get a little better now on this. We've got, we got 1.18 profit factor. Let's go back in and look at what we tested. This was set to a 3. So interesting. The bigger stops gave us more profit. Less trades too. But all right, just for shiggles, let's go 3 to 4. I'll see what that looks like. Good. I'm glad you guys got something from that one. Yeah, I think there's a couple good ways to look at it. You could do a blend of both, you know. You want to kind of do both of them. I think, a lot of this is, you could have somebody who runs an algo who is really great at optimizing, really does a good job optimizing, but they're not great with big picture. You could have somebody who's great with big picture, but terrible at optimizing. When you put these things together, you've got something that can make you a whack load of money. So learning that stuff is super important. Don't take it for granted. It's too hard to make money in this industry to just leave things for granted. Okay. Now remember, on this back test, this optimization, I'm not looking for it to be the best thing since the automobile. That's not what the point of this is. The point is to get something that's really good that I can choose to deploy based on the day that I'm presented with. That's the way I would run this algo. How do we know it'll work the next week? That's the beauty of this particular way of looking at it is I'm turning it on to either trending or oscillating based on what the day presents. You're going to have some good days. You're going to have some bad days. Welcome to trading. But I think for the most part, if you run it that way, you're going to get really great results. So the only way to know is to run it. And then you can go back through and go, well, maybe I'm a little too restrictive. Maybe 3.6 is too big of a trade. You know, maybe on a 1,000 volume, I'm not really looking for that big of a trade. These could all be factors. We can go look at the chart and see what they look like. Let's go check it out. I know it's really hard to see on the Zoom side of things, so bear with me here. But this is, yeah, it's a pretty big trade. You've got your entry is above the, or your exit's above the high. Would have been better off taking a quicker target right here. I know it's really hard to see. So, but that one, yeah, that one would have been a trade anyway. This one too, you know, it's just too big. I think for what I would be looking to do with this, I think 3.6 is way too big. Let's go back to the 3 if I can find it, and we'll check out that chart. 3.2, is this one 3? 3.3, 3.1, 3.7, 3.5, 8, 9. Okay, fine. Let's go this way. Let's go here and then show log. And I'll just go back to the last back test here. Pull it up again. Yeah. If you're adjusting daily, how much time do you need each morning? 5 minutes. Yeah, 5 minutes is all you need. Because what you're doing is you're just saying, okay, I think, you know, it's going to be a trending day today. I'm going to put it on trending. The beauty of it is, like, even if it's a trending day, but it kind of goes into an oscillating day, you might still get some really great trades off the band. But then if it's a, you know, reversal day and you do the trends, again, you know, you might still get a couple really great trades out of the day. So I don't think one is, you know, super detrimental if you get it quote unquote wrong for the day. There was one other thing that I wanted to test here. Let me make sure these are all, yeah, here we go. Why did it do that? All right, so 3 was the best. Let's go look at it though. Let's check it out. Chart is using the half-hour analysis over optimizing. Not necessarily. Depends. If you're using time blockers, you need to know why you're using them. Don't just use them because that's what the results are giving you. Because then all you're doing is curve fitting. I think if you're using it because you want to avoid market open and you're trying to fine tune, well, what is market open for that market? Maybe it's 9:15 to 9:45. Maybe on another market, it's 9:20 to 9:40. That's okay. But if you're just saying, well, from 11:05 to 11:25, it wasn't great, so I'm going to turn off that time. That's probably a little bit too extreme. You know, unless you're looking at a data set of like thousands of trades, okay, maybe, but ask yourself, is it weird? Like, you as a trader, if you were putting that into your trade strategy, and if you send that trade strategy to me and you say, Jim, can you look at my trade strategy? I want to get a second set of eyes on this. And I'm going to say, yep, great. I'll go in and look at it. And I'll say, send me a bunch of your trades and we'll check it out. And if I see that you're blocking 11:05 to 11:25, I'm going to ask you, why are you doing that? If you don't have an answer, then it's not right to do it. So don't get too extreme with that kind of stuff. Don't get hung up in that. There's some stuff that you optimize. It's like, yeah, that makes sense. If it doesn't make sense, if you can't make it make sense to me or to somebody in your, you know, trading world, it's probably not going to fly, right? Okay, so here's the trade. The exit is kind of right at the swing highs. Yeah, that's fine. I think this looks good, actually. I don't have any problem with the stop and target location. I think they're good. And if it's going to give you more profit, cool. So they're all Eastern time, what I'm using. And so if you do use any of these, yes, you will have to reset those times based on your time zone. So I like this as 3. I think that's cool. We found a meaningful change. Let's go in here and see, is it better to use the VM histo or not? Let's just find out. We'll run a quick test on that, and then we'll take a quick break after this, and then we'll go into the next algo. Probably not going to have time to get into the brain training because we spent a lot of time on the intro. So we may look at doing that tomorrow. But we'll definitely go into that some more. So the only way, so Lance has a great question for NQ. How do you decide if the strategy is going to be able to execute without, say, 5-10 ticks of slippage? If you're trading 9:30 to 10, you're going to get a fair amount of slippage. That's just based on how your broker and the order flow is coming through, and they're able to, put your order in and so on. Yeah, but as far as like, slippage is slippage, you're going to get it. If you're trading the micro crude, expect to get some slippage. Whatever you get in real-time trading is what you're going to get on the algo. Just expect it to be like that. So, but if the back test is good, it's going to be good, even in real life. So, steps necessary to install. For some reason, I've installed. Ooh. Maybe reach out to support on that, and kind of, if you want to run through kind of what happened, maybe we can take a look at, what was happening. So try to figure that out. Cool. So anyway, so reducing, we did get a better profit factor. We've got a way better drawdown, but we've only got half the profit. So is it an advantage to, to use that? I don't know. Profit factor is better, but you've got half the trades. So you kind of got to decide. I think depending on how you're running it, again, we don't want to get it too optimized, because it's obviously we can't tell the algo will run it on this day and not on that day, and that's just too involved. We're going to deploy this based on whether the market's trending or not. So I think it's fine like this. I personally wouldn't necessarily turn on this unless I'm seeing a lot of bad days. Then I would go, okay, yeah, probably makes sense. Let's go check out the daily and see. So yeah, I mean, nothing super major here. We've got a fair amount of winning days versus losing. Let's go to the other one and see what the difference is. I don't know if a VPS would help you with slippage or not. I'm actually not sure on that. I suppose if you contact the VPS, they're going to tell you, "Oh yeah, you'll reduce slippage because I want to sell them." I would reach out to NinjaTrader on that one and ask, or whoever your brokerage is. If you're trading with Apex, then you could contact Rhythmic on that and see what they say, or Trade Evade or whatever you're using. This actually looks better. There's not as many losing days. There's 2 decent sized losing days, but there's more winning days. So I think this is actually a safer bet. You're not going to get as many trades, but let's go see how many trades per day. Yeah, 3 to 4 trades a day. That's fine. I don't see any. There's 82 trades over the course of a month. I think that's plenty. So yeah, this could be a good one. Let me go ahead and save this then. And we'll leave it like that. And then let's go ahead and check out the times. I don't optimize for times. I always just look at it, So we'll go here. I think everything crossed over. Let's see. 3, 1, 14, 4, 7, 1, 3. Yep. Looks like everything crossed over. So now let's just look at all the times. I wanted to optimize it for this time though. That's why I focused on that time. But it, obviously makes sense for me to expand it out and see, well, is there more money on the table for other times? If so, why not trade it? I never want to trade the equities after 2:30. Never. Why? Because it's a coin flip. You don't know what's going to happen. all of the institutions, and from a auction standpoint, they're done. They're not doing major trades after 2:30. It's pretty rare. So personally, I wouldn't trade it past that, but to each their own. Is there an algorithm that calculates bars per minute? There is. It's our we have one called fractal converter. It's an indicator. Yeah. Yeah, everything is Eastern time. Yeah, exactly. Let's see, analysis. Yeah, it looks good. All right, let's go to half hour of day. Okay, so nothing good before 8:30.
Change it to entry time.
Oh yeah, thank you. Nothing good before 9. And then, there's one little blip there, but obviously you took a loss there, so it doesn't make sense. So 9 o'clock and on is the answer. So we were able to expand it out a little bit. Funny enough, 9:30 to 10 produced the most profit, and we had that blocked out. Notice how things really taper off here. If you go to, by period, let's see. Yeah, 2:30, there's 2 trades that came in right at 2:30, and then you've got 21 trades at 2 o'clock. It's actually a pretty decent number of trades, but they're not really getting you very much paid. So you can go in here and see, from your profit factor, is it really deviating a lot from your win rates and that kind of thing? We can look at the win rate and say, well, if we're 1-to-1, anything less than 63%, 62, 63, I'm really not interested in, to be honest with you. So here's how I would approach this from a time perspective: is looking at, first off, do I have a decent number of trades? And then secondly, if I do, then I'm looking at the win rates. So here at 1 o'clock, it's not great, but it's not terrible. At 1:30, it's really great. At 2 o'clock, it's not great. So what I'm going to do first off is I'm going to chop this down to 2 o'clock. That's my stop time. Okay. The next thing I'm going to do, and that's going to chop these 2 off. Okay. The next thing I'm going to do is I want to look at these in here. Anything that is less than 62%, I'm going to cut these out. So 11:30 to 12:30, adios. So I'm going to go in here. Now this one doesn't have time blockers. Okay. So you would have to have 2 different templates on this algo. Some of the newer ones do have time blockers, but for this one, you could just go, okay, I'm going to have one that'll run from 9 to, looks like really 11:30. Okay. So we'll go 9 to 11:30. Doesn't make sense to have it before that, obviously. And then if you wanted to have another one that is running from 12:30 to 2, then you would run a different one at that time. Okay. So that's a way to get around it. And you can run both algos on the same chart because they're 2 different times. And so you can have them both on there. One will trade till 12:30 or to 11:30 or whatever we have. The other one will kick in at 12:30, trade till 2. So, but on the new ones, obviously we have time blockers. So that's great. Okay, I'm going to save this. Let's take 5, and then we'll come back and we'll go through thrust breakout, and then we'll probably call it a day. And then we'll look at, we'll probably do brain training, some of that stuff tomorrow. So, so here's our setting, and then I'm going to save this. While we're taking a break, I'm going to pull it up on the chart. It's the same process for the reversals, the break trades. So just bear in mind. I'm not going to go through both of them because we'll be here a while, but you can see how much time this stuff takes, right? Like it takes a good amount of time. So it's interesting. Let's add this in here, but yeah, let's take 5. Let's come back at 11:15 Eastern, and then we'll jump into the next one. Okay, be right back. Hey guys, a couple more minutes. I'm just getting some more coffee going here, so bear with me. Jeff is welcome to entertain while I'm aside here for a couple more minutes, but we'll be back soon.
Hey everyone, I just put a link in the chat box. It's a document that it's kind of like a rule of thumb. Uh, Earlier, Jim talked about the fractal converter, which basically you select a minute time frame and it will convert to either volume or range. And so this is a cheat sheet that we created that allows you to get some idea, just a general idea of what the 1 minute equivalent is of various markets for both minute and range bar size. Obviously it's going to change over time. This is kind of an average over time, but at least it's a rule of thumb if you want a starting place for, when you're doing optimizations. So we just share that with our users. So I thought I'd put that link there.
All right, we are back in action. Cool deal. I'm just looking through some of the comments. I think we've got just about everything good to go.
Jim, while you were coming back, I shared the link to that fractal converter
Oh, cool.
cheat sheet that we
Yep.
share with everybody. So I told everybody. So I just
Sweet.
let you know they did that.
Good stuff. Yeah, that thing is helpful. We did those conversions a little while ago, so double check them, but those are good. So here's what I would suggest with this one, kind of elaborating on what we were talking about. Again, you can set it to both, break and retest. You can set it to both, and it'll just take whichever comes first, right? So that's one way to do it. The other thing you could do though is you could have one chart that has, let's call it 30 days worth of trading on it, and one of them is a retest chart, and the other one you have set to break trades. Then you would go in on your 5 minute and just look at it each day and say, okay, we're coming into 9 o'clock, right? are we trending or oscillating? You would just look at the chart and you'd go, okay, based on my analysis, we had the, break here and then it kind of started to break, but it's really not trending. Okay, then you set it to whatever you want, right? And then you go look at the chart. Okay, was it trending or oscillating? Look at the chart for that day. Was it winning? Yes. No. Okay. That's a way to know, is it going to work the way that you want it to, right? So yeah, so that's good. I think we've got some good stuff going here on this one. We came in at 1.58. Looks good. Yeah, it looks good. Yeah, so that's cool. That's good to go. Let's go ahead and save this, and then I'll get this out to you guys as well. All right, so let me call this ATR vol on MNQ. This is on a 1000 volume. And this is going to be Eastern time as of 6:24. Okay. And then we can go ahead and paste these in Discord. What I'm going to do is, Jeff, I'm going to just send this to you, and then you can paste them in Discord if you don't mind, because you've got the other one there too. That would be helpful. So let's go templates.
Yeah, just send it to me. What other one are you talking about? The
There was the one that Lennon did one for us, right? For the week.
oh, for ATR.
Yeah.
Yeah, yeah, okay. I got put that one in
Sweet.
there.
All right, so let's see, Jeff. There we go. Cool. That's incoming now. Sweet. All right, let's move on to the next one. Let's get out of there. Move this. Toodaloo. Good. All right, so next we're going to do thrust breakout. We got a nice little template here. We got 80 trades, about a month worth of testing, and we've got decent drawdown, not too high, but the profit is great. So drawdown to profit looks fantastic, and decent win rate. We're at 2-to-1. 2-to-1 trades, and we've got a 61% win rate. That's huge. That's actually really, really solid. I've got this sized out to about 500 risk per trade, so obviously you can size that accordingly. This one was done by, who did this one? Let's see. I can tell you. So Lennon did one for you on ATR vol. Let's look at Patrick did this one. Nice. Yep. Thanks, Patrick. Good work. This is great. Everybody say thank you to Patrick. Good time spent on this, I'm sure. So let's go to half-hour day. 7 trades, not a ton, but
you're on exit time.
Oh yeah, there we go. Yeah,
didn't change much.
Yeah, no, it didn't. Oh, this is great. Yeah, this looks really good. So we've got some time blocked here, some time blocked here, market open there, and then this one, a little bit of an extra window there. We don't have a name for it, so, but it seemed like that was going to be a helpful thing. And there's a decent number of trades, though. If there was like, 5 trades or something, or 20 trades, or there's 80 trades here, so chopping some of those time frames out might have been a good thing. So no, different Ron. There's a lot of Rons around here, actually. It's a pretty popular name. We got Sir Ron Scott. We've got another Ron that's with us pretty regularly, and then Ron K is the one that did the templates on some of those. So, and then ATR was actually done by Lennon Palacios. I'm not sure if Lennon's on the Discords or what the name is, so you'd have to ask. I don't know. All right, thrust breakout. What is it? What does it do? How does it work? Let's jump into it. I'm going to pull up a separate chart so we can see what we're doing. This will make our lives easier. New chart. What market is this? NQ, I think. Let's see. Yeah, NQ 750 volume. So, which is actually about the same as far as time frame on a MNQ. Most likely, this is going to be pretty similar to the MNQ 1000. The NQ has less volume than the MNQ. not as many traders trade this one. So, all right, let's go in here. Let's add the, which one? Thrust breakout. I'm gonna load the template. And let's enable it. What I'm going to do here, though, is I'm going to turn off the show zigzag just because it got pretty noisy there. All right, let's go see. Volume bars are actually great to trade. Really, really great. I like volume bars a lot, actually. So, all right. A couple stop outs there. Let's go in and look at these. So thrust breakout, what it's doing is you've got, how many of you are familiar with rally base, drop base, right? That's what we've been trading it in the room. We still call them out. Sometimes we trade them, sometimes not, but we still call them out for those that want to take it. What's a rally bar? Rally bar typically is going to be more than 50% body to wick ratio, okay? So greater than half of this candle is body. Less than half of, the body to wick is going to be a base bar. And it could be any percentage with the algo, but we're just going to use 50% because that's easy. Less than 50% body is going to be a base bar. That's a base bar. That's a base bar. Are the wicks bigger than the body? Yes. Yes. Definitely. Definitely. Not sure. Yes. 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 Okay. Those are base bars. The rally bars are anything where the body is bigger than the wicks. Okay. Here and here, here. Those are technically rally bars. Okay. How do you know the rally bars? They kind of close right toward the highs. That's an easy way to look at it too. So that is in the quick theory version of rally base. What is the concept behind rally base? Why does it work? It's a supply and demand concept. The idea is that what happened here? They ran out of buyers up here, right? There's no more buyers. Buyers say, you're too expensive, not buying at that price. So what do the sellers do? They bring price down. They start selling at lower prices. Sellers are coming down to the buyers to do business. So what happens? More buyers step in. Well, what just happened there? The demand outpaced the supply. So there's more demand than supply at that point. Why? Well, here, I'll ask you, why? Why is there more buyers than sellers at this location? Who can tell me? I know there's some gap traders in here that should be able to tell me. From a market practicality standpoint, I'm not filling stops, just the opposite, right? At that level, there are buyers stepping in. What are those buys? Those are buy limits. How do we know they're buy limits? Well, they're taking profit, right? It's profit taking. Yeah, profit taking. So they came down here, they saw those wicks, and they said, I'm going to put my limit order right there to take profit. So some profit taking comes in, market comes back up. What happens? Sellers say, all right, I missed the boat on the way down, so I'm going to wait until there's buyers up here, and then I'm going to sell here. That causes the market to come back down. That's what's happening on a rally base, drop base. Okay, you have a imbalance of buyers leading the market to go up right here, right? Imbalance of buyers. Then what do you have? You have some profit taking. That profit taking comes down to find new, fresh buyers that say, oh, I like that. Let me get in on this action. So more buyers step in, causes the market to come back up. So the idea is that if the market is going up like that and it momentarily stalls, but then it goes up above the high, what does that tell you? That tells you that not only did buyers take profit, but they came down, found more buyers, and those buyers were able to rally the price even higher. So if we're able to trade a breakout of that price, that's a great opportunity to get into the market because the buyers are on our side. Where do they take profit? At the highs. What happens there? Momentary profit taking. New buyers step in again. Lo and behold, there's a whole nother rally coming, right? So, my mouse size? I can't help you there. I'm sorry. I don't know how to do all that, but I'll draw on the charts as much as I can. Okay, so you can see what I'm looking at. I know it's hard to see some of this stuff. It can be a small screen and Zoom isn't always the best, resolution or whatever, but that's what's happening with the thrust breakout. That's why it works. Thrust bar, rally bar, base bars, breakout. Thrust bars, base bars, breakout. Cool. That's how the system works. Simple price action. Okay. So let's go into it. Let's see what the settings are and how it works. This one's pretty easy to go through because there's not a lot of settings. It's a price action. It's based on supply and demand. All right, so you have a body to wick ratio. Extended range candle. ERC stands for extended range candle. NRC stands for narrow range candle. In other words, rally or drop and base bar. Okay, so here's your rally bar. Here's your base bar. It will work on minute charts, volume charts, anything that is variable range candles. Variable range candles would be volume, tick, and minute, because the range of the candle is different on each bar. Range candle, Renko bars, anything of the sort, those are going to be fixed range bars. I wouldn't use this system on a fixed range bar, for sure. Want to use variable range, yeah. So volume, minute, tick. Max allowed basing bar. So the percentage is telling us what size body do we need in order for it to be considered a thrust bar. What size wick or what size body do we need for it to, for it to be a base bar? So in other words, how high can we go? What's our minimum? What's our maximum? That makes sense? Okay, so if the ERC, if we're saying that the extended range needs to be at least 50%, then you just put 50. If the basing bar, we say, well, we don't want it to be more than 40%, then we put 40 there. Okay. Max allowed basing bars. If you have a rally bar, okay, that's our rally bar. It's all body, right? And then you get a base bar. Base bar may look a little something like that. Okay, there's our base bar. But then you get another base bar. And then you get another base bar. Well, this one would have been a breakout, so let's not use that. Let's erase that. And you get another base bar. And then you get another base bar. And then you get another base bar. That's a doji. And then you finally get the breakout. Should you take that trade? What was happening in here? We went from an imbalanced market to a balanced market. Think of this like those of you that trade volume, that's a point of control. That's a new point of control setting up in the market. A lot of volume changing hands at that price. So what happened here? How many of you are familiar with the concept of the fake out, breakout? FOBO, not FOMO, FOBO. Fake out, breakout. They fake the break. Why do they do this? Because everybody who said, I'm going to catch the falling knife, it's going down, baby, I'm in it to win it, they take a short position right here. Where do they put their stops? I'm going to put my stop right here above the highs because I know this thing's going down. I can feel it. I'm a gambling trader. Let's do this. And so the market makers and the institutions say, cool, I'm going to go grab those stops. You're going to end up buying at the highs, and I'm going to sell because I'm a smart trader. So smart trader sells. There's your fake out breakout. Market comes down. What happens next? Wouldn't you know it? They sweep the other side. They get more people into the market, and then they come back up. Then they do a lower high retest, and then they slam it down. What did they do in that process? They gobbled up a lot of orders that are making them a lot of money. So if you have a lot of basing bars, the idea is rally, base, 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 base. If you break the high, probably not going very far. There's not going to be a lot of follow through. So we have a setting in here that you can set to max allowed basing bars. Typically 3 is a good number. Okay. I like to keep these at 50, 50, 3. These are kind of the standard parameters. Now you can deviate one direction or the other, but know that that's kind of your happy medium. Okay. That's your true north. Pullback threshold. How far into the thrust bar are you willing to, see a pullback before you say, it's not really profit taking. In fact, I think because of the depth of the pullback, it's actually going the other way, right? It's time to go down. So I don't want to take that trade. So if it comes down to, X percent, let's say you use, a Fibonacci ratio even, you could use a Fibonacci number, or you can use the 50 or whatever you want to go with. That's what that's doing. So it's telling it how far can it go in a retrace against the rally bar before it's no longer valid. Again, 50% is kind of the standard number there. Minimum and maximum thrust bar. What would be the advantage of this? Well, you want your thrust bar to just be, all body, but a small candle like that, right? Is this candle very large? No. Is that candle very large? No. How do we know? ATR. ATR tells us. You should want to have that the rally bar or drop bar needs to be at least 1 ATR. Like, that's my take on it. Do what you want, but that's how I have traded it. You can do a faster ATR if you want to be a little bit more aggressive. I like to set it to 5. By the way, I've traded this manually, and this is exactly how I do it. And I literally have this on a separate chart, and nobody knows that, but it's my secret. Okay, don't tell anybody. I'm like, well, there's hundreds of people in here. Everybody knows now. Okay, fine. You know. I set it to an ATR of 1. And if the bar is bigger than ATR 1 and the body is greater than the wicks, it will color my bar for me. I've just set up my own thing to do that. I like having that to show me so I don't have to go in and look at ATR and compare. Okay. So, yeah, so set that to at least a 1 or whatever number you want to use, but have a number there. Max size, where would this come into use? News, market open, big news events. If you say, well, my rally bar is bigger than 3, and that's overextended at that point. What this is saying is that we had such a huge rally in the market that I don't think it's going to continue to rally. Therefore, I don't want to trade a breakout. This is a breakout system. When do you trade breakouts? In trending markets or oscillating markets? When do you trade a breakout? Trade the breakout in a trending market. Yeah. So you want to look at, is your market trending for the day? Is your market trending? Yeah, that's probably a good day to run this. If it's not trending, it's probably not a good day to run this system. Right tool for the job, right? So I would suggest trending markets on this. We'll just do one contract for now. Entry order type market is great. Limit, that's fine. I'm not going to go through all that. Allow entries, that's fine. Run type, back test. We're going to do something else on this, and I'm going to show you. Minimum allowable stop. We're on NQ. My gosh, if I'm trading less than 30 ticks, good luck on NQ. Max allowable, don't care because I'm already sizing that in based on the max bar size. Stop loss, we're going to go, you've got 2 choices, static ticks, and that's just going to be ticks, or percent of range. You've got a percent of the base bar range or a percent of the extended range candle. If you have questions after the event, send it to support@nstradingacademy.com. Or if you go to the ARC website, just click the support button. That'd be your quickest and most efficient way to get answers. Yeah, so we went through at the beginning on how to figure if there's, if it's a trending or oscillating day. So definitely check out the replay when you get a chance. That'll give you some insight there, yeah. So, I prefer to just use a basing range, and then you can do something like percent of basing. This is actually the offset. So I like to use the offset as like 25 to 50, somewhere in there. So replays will be sent out at the end of the week. I'm sorry, I wish they were coming out sooner, but it's the only thing that made sense. Can you trade stocks with thrust breakout? 100% yes, absolutely do it. Please do it. Please trade the trending breakout, thrust breakout on stocks. Please do it. It will be just glorious. 5-minute candles. 5-minute candles. Anything less than a 5-minute candles, you should be on a tick chart or a volume chart. Do not trade the system on less than 5-minute candles. That's my opinion. I've traded this system. I've tested it. I've tested it on all different charts. The only thing that I found meaningful was 5 minutes and up, unless you use a volume chart. Okay, off on that tangent. Take profit 1-to-1. That's what I prefer, at least from a testing standpoint. Time, all of that. So that's what the system's doing. Okay, those are the settings. That's it. So let's do like we did before. Let's go to, I'm going to move this out of the way. Bear with me 1 second. Okay, we're going to look at this again because some of our attendees here were not able to be with us earlier, so we'll look at it again real quick. So we're going to do this. This is a pretty well-known way of figuring out if it's trending or oscillating, is using a number of EMAs, and then I'm also going to add the swing structure, and we'll look at that. Okay, so now we got all these lines on our chart, right? So let's say we're coming into today, right here. So this is where, oops, well, that's fine, I guess, but that's where we're looking to start trading for the day. So we come into the session. Where's my drawing tool? All charts, yes. Oh, I'm on the wrong day. All right, let's go back in time. There we go. So this is where we are just starting to trade. This is our 5-minute chart. It's our higher time frame. The EMAs are down. Okay, so we've got 25, 50, 100, 200. Yes, you could set different colors. I'm not doing that right at the moment because it's just not that big of a deal right now. Where do we stop trending? Right here. How do we know? Because the EMAs are no longer crossed. They do cross back over here. So, you can look at it and say, well, they're crossed again. But at this point in time, though, they are all down. Okay, so we've got, this one, this one's below. Yeah, this is down. So this is 25. I know it's hard to see because they're not the same. They're all the same color, but that's what we got. So the 25 is below the 50. The 50 is below 100. 100 is below 200. They're all down. So it's a trending market. Based on that. The other option is, well, are you making lower lows? Yes or no? We made lower lows. Then we went into an uptrend. Then we swept, came inside. At this point in time, this in here is oscillating. But then we broke back down. And then we came up. It's trending. How do we know it's trending? Because we're breaking the highs, and yeah, we came into this. So I guess based on structure, you could look at it either way. We're inside of this impulse. Anytime you're inside of an impulse meaning, sorry, I don't want to get too deep into this, but lower high, lower low, that's an impulse. Higher low to higher high, that's an impulse. Okay, so anything that is trending in nature. Okay, is this a impulse? No. What about that? No. Is this one? Yes. How do you know? Because it's a higher low to higher high. Okay. Anytime you're inside an impulse, you are oscillating. But obviously, this is not oscillating until you get this pivot right here. Then you're oscillating. But then you break. So now you're trending again. Okay. I guess you could go either way. But I think realistically, based on the fact that the EMAs are down too, we're going to call that trending. So we're going to go to this day. And we're going to say, are you guys still with me, by the way? I'm getting little nasty grams and my internet is maybe choppy. Can you guys hear me okay? Just give me a yes if you're still with me.
I hear you.
Okay, cool. Sweet. All right, so let's go here. So this one, why did it not start trading until 11:40? Oh, I wonder if I didn't change the time. Anyway, that's fine. We'll just run with it. So that's a trending day. So we want to run it on this day. Well, what happens? 2 trending trades, 2 breakouts, both of them hit targets. Cool. We keep going. It's 1:30. Do we want to trade a trend trade down here? I mean, if you are semi-auto, you're probably not taking that trade. You might, I don't know. Maybe you love it. But where are we trading into? Support. But if you're trading as an algo, yeah, you're taking that trade because you set it up to trend based on the day. Still trending. You can go in and periodically check it, you know, because odds are when you get to this point, it's probably not trending anymore. Actually, no, we are still trending till we get to this. Then it's like, okay, yeah, it's dead. But that's kind of an idea, right? So what did we get out of the day? You know, really, to me, I personally wouldn't want to trade after that time. So me, I would be done anyway, but that would be 2 out of 3, which is a good day. I'll take 2 out of 3. So there's the idea. So let's go into this one. We're going to do a little bit of tinkering with it. I don't have data for stocks. Otherwise, I would love to pull this up on stocks for you. Somebody give me a stock that you are interested in trading long today. Any stock. Somebody give me a ticker. Tesla. All right, so let's go look at Tesla. Okay, this is just to give an idea on the concept. Obviously, this is not the algo, but all right, so we've got Tesla here. So this is our day. So here, let's go into the higher time frame. On a 5-minute is going to be the 30. Are we trending or oscillating on the 30? Kind of trending, right? I mean, kind of oscillating. Yeah, you can tell by the momentum is kind of slowed down. There's really not much happening, so maybe not the best market to run it on, but we'll play devil's advocate and look at it. Rally, rally, base. Never got the breakout. No trade. You're not trading short, so only longs, rally, base, rally. There's your breakout. Odds are you're probably not trading trending here, but you got a nice break there. Let's pick another one. NVIDIA. They're probably killing it right now, I think. All right, NVIDIA is down. So, you know, if you're shorting, which you're probably not, but if you are shorting, you've got drop, base, drop right there. So the system would take the trade right about, you know, below here. Stop is going to be a percentage above the base candle. Call it right around here. And then your target is going to be 1-to-1 as right down here. So, you know, it definitely works. Give me another one. Let's see what's actually going up and to the right today. Let's see. You can trade stocks in Ninja. Can trade stocks. Apple, is Apple going up? Let's see. Apple's going up. What about the higher time frame? Bearish. Just sweeping liquidity here, but there's a rally base. There's your break. Okay, so there's your base bar. That becomes your range. And then the break would have happened here. Stop goes below the low. Bada bing. You made some money. You can trade it on stocks. So that's just a quick idea that yes, stocks are probably even better than futures. Honestly, probably even better. All right, so let's go in here and oops, not that. Let's go into the settings and let's mess with them. I'm going to go back to our friend MNQ because I just prefer that one. Let's go to 1000 volume again. Oops. And 3 days is fine. I don't need to get too detailed, but all right, let's go in here and I'm really not going to mess with it much. 50 is fine. Max 3, pullback threshold, 60 is fine. Entry offset in ticks. Yeah, let's bring it down to 5. No, let's leave it at 6. That's fine. ATR, we're going to go 5, but we're going to bump this up to a 1. Max ATR is going to be 3. Oh, yeah, that's a good point. When trading stocks, depending on what you're putting it on, you might decide to change that number. That's a good point. Otherwise, you're using ATR, so it doesn't really matter. Go 500, and then that's fine. Enable algo stop loss. Yes. Minimum allowable is 30. Max. I don't really care because I've got it already based in there. Percent of basing range is going to be 25 and 1-to-1 risk reward. I'm going to go 10 o'clock to noon o'clock. Invalid trade windows. Just going to disable these for now. Disable. Okay. Show and require double EMAs. Yes. 100% yes. You can do it to minutes or primary bars. I'm going to go primary bars, 9 and 20. Required. Require the structure, no. Show the VM, but not required. Okay. There we go. Hit OK. All right, let's go look at the trades. Don't care about P&L yet. I just want to see. What do we got going on? Love it. Momentum's up. EMAs are up. Everything's up. Let's go along. What about here? EMAs are up. Momentum's up. That's the problem. What are you trading into? Divergence. Lots of it. Should you take that trade? No. But the algo is going to because it doesn't know any better. It doesn't know that it's trading into divergence. So, double-edged sword. Do you want to trade semi-auto? Turn it on, turn it off? Or do you want to let the algo do its thing, which is where you're going to spend more time optimizing, right? Here's my philosophy on this one. Very, 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 very trending. Very trending. It's a breakout. What is, I guess, what's more forgiving? A pullback or a breakout? Pullbacks are always going to be more forgiving. Why? Location, location, location. If you're trading at the highs, you're saying that you expect the market to continue to rally. If you do not have momentum on your side, you might as well just shoot yourself in the foot. Like, go get the gun, shoot your toes off, because that's what's going to happen. Okay, so this is a great trade. Really great trade. It didn't work. Not all breakouts are going to work. Here's my philosophy on this. Does this one have it? Let me see. Oh, bear with me a second. I just want to see something. All right, let's do this. Let's do this. First thing I'm going to do is I'm going to require the VM. Require VM histo. Yeah. I want momentum on my side. It's a momentum trade. It's a breakout. I want momentum on my side. Okay. The other thing I want to do here, it's a breakout, right? You keep saying it's a breakout. I know. I don't know why, but I am. Limit trades in consecutive in the direction 1. I want to see what that looks like. Why do you suppose I would only want 1 trade per direction? Well, because you keep saying it's a breakout. Breakout, breakout. Less is more. Less is more. You're not trying to trade every breakout under the sun. Look at this. This is one where you go as a smart trader. And if you're watching this, you're going, heck no, I don't want to go short there. Why not? I mean, it's about as clear as it gets. Like the market is done going short. Like if you're a semi-auto trader, you're going, nope, I'm going to wait for that long. The long looks beautiful. Even though I'm trading into a little bit of divergence, I still like it. It just didn't work. Okay, move on to the next trade. But that one sure worked. So here's the deal. We're going to optimize it this way. And let's go ahead and run through it real quick. The good thing is this one doesn't take much time. So we might go a little bit over if that's okay with you guys. Those of you that got to run, of course, we are recording and we'll get it to you. No problem. So first thing I want to do here is let's save it. Save, starting. All right. Cool. I don't know why it got rid of my VM, but it did. That's fine. You always hate free extra training. Yeah, I do too, huh? It's ridiculous. All right, let's go to thrust. And we're going to go to load, starting point, Shazam, good to go. All right, and I'm going to go back maybe about a month's worth. Okay, so while we're waiting for this to process here, let's go to the 27th through 21st. That should be fine. Is that 4 weeks? 1, 2. Yeah, I think that's 4 weeks. While we're waiting on this, what was I going to go over? Dang it, I lost it. That's what you get after 3 hours of talking. Oh, I know. What do you think is the most common question we get? What is the most common question we get with the algos? What do you think it is? Yeah, well, yeah, that's right, David. You actually nailed it. That is, but what is the other most common question? That is a good one too. What's the most profitable? The first one was, can you give me a template that works all the time? I would love to. I would love to. Whether that happens, well, of course, that is yet to be seen based on the markets. And then the other one was, what's the most profitable, right? That's a good one too. The other one is, though, how often should I optimize? That's a big one. How often should I optimize? So let's answer that question while we're kind of going through this. So let's take a look at this first. It's pretty decent right out of the gate, 1.62. We got 60 trades, not a ton of trades, but again, we're filtering for direction, based on not taking too many trades. The other side is we're going to expand the time out a little bit. I want to optimize based on that 10 to noon, because that's kind of, it's based on how, I want the algo to trade for me. So yeah, but that's a great starting point. I already looked at the chart. I already know this is kind of what I want to do. So I'm just going to go straight into optimizing. So let's go ahead and pull it up on the optimization. Everything carried over, so that's great. Extended range body type, we can go 40 to 60. I'm not going to get really in the weeds on this. We'll go by 5s. I just want to see if there's any meaningful difference. If not, I'm going to leave it at 50 because I don't need it to be super optimized. It's already pretty decent, so. Max allowed basing bars, it's 3. I'm not changing it. Pullback threshold, we'll go 40 to 60 as well. So 5 times 5 is 25 times 5. It's going to be about 125. I don't know that I want that many tests, so I'm going to go by 10s on this one. That'll be 3. Let's see, how many is this? 75. That's not terrible. I'll go with this first. I like that, Daniel. That's funny. Define working. So how often do you optimize? It depends. Depends on what? Depends on how many trades you're taking. If you're on a 5-minute chart and you're getting 3 trades a week on your template, I love it. You're not optimizing every week. Like, why would you? You get 3 trades a week. Like, if you lose all 3 of your trades, is that an anomaly or is that just business as usual? Even if you have a 75% win rate on your trading, there's still a decent possibility that you're going to take 5 losers in a row. Like, there's a decent possibility of that. Not huge, but it is there. So depending on your win rate, will tell you at what point do you start to go, something ain't right. There's sites that you can go and look at, streak calculators, based on your win rate, you can punch that in and figure it out. But, if you're getting 3 trades a week, you're not optimizing every week. I would say if you're starting to get a number of losing days in a row and you're trading at least if the norm is day trading, right? Most of us are day traders looking to get 2 to 3 trades a day per system, right? I think that's a pretty fair assumption. If you're getting 2 trades a day, that's 10 trades a week. If you have 2 to 3 losing days in a week, you need to optimize. Okay, that's one factor. The other is based on number of trades. You always want to kind of start with about 100 trades is what, excuse me. It's what I like to start with, about 100 trades, and then filter it down. Not too much, If you start cutting more than half of your trades out of the test because you're filtering so much, maybe it's a bit much. I don't know. Depends on the system, I suppose. But yeah, I mean, if I would say, if you're a day trader, 2 to 3 losing days. If you're trading only 2 to 3 per week, then you're probably looking at like 2 to 3 weeks losing before you start optimizing again. So that's kind of like the, oh crap button, like reset, panic, time to go back to the drawing board. But if you're doing about 100 trades a month, if you're at about 100 trades a month, that's a pretty decent number of trades. That's like 25 a week. It's kind of a lot, actually. Then you're looking at optimizing each week for sure. But we would say about every 20-ish trades, you want to look at re-optimizing just to see if anything needs to change. It may come back that nothing changes. It might just be like, that still looks the best. It's just a crappy week or whatever the case might be. Or you had CPI, or you had FOMC, or any other acronym you can think of. Hint, hint, don't run it on those days. You don't know what's going to happen. And I'm not leaving my money to chance. Sorry. I leave my money to an edge. Probability, not possibility. Okay. Freaking post that somewhere in your office. Difference between normal market action and broken. News. You know, it's really the news. You can kind of decipher what's going on. Like we had CPI and FOMC in 1 week, and it was really slow until those numbers come out, and then it's like chaos. And then it kind of gets back to normal. So anytime before or after the big news releases, just take caution, you know. And that's the thing with 30 minutes. Hopefully that's not real. Yeah, it's going down. That's the thing with algo trading and, you know, trading in general. Everybody has a different approach to it. So it's somewhat like an art form rather than a science, you know, but there's some science to it, but there's some art to it as well. Yep, Weibo was on Friday. Or Thursday. Thursday, not Friday. Cool. What else? What other questions do we have? It looks like this one's probably going to take some time, so I might have to post this after the fact here. But what other questions do you guys want to cover while we're at it now? Yeah, what I'm talking about. Yeah. Yeah, over curve fit, you know, it happens. I would say, you know, the newer algo traders maybe tend to over optimize a little bit. And then you kind of start to dial it back a little bit, and you're like, it doesn't have to be 100% winners. It's never going to be. So yeah, 97 win rate. The one that only takes 1 tick per trade, Luke. Yeah, that's a 97% win rate algo. It's not going to make any money, but it'll win 97% of the trades. If on the profit factors above 4 are dangerous. Yeah, it can be, John. Yeah, that's a very good point. It certainly can be. Are you going to spend time on VM? Yes, I will. No profit there. What's the most neutral algo that can work both in trend and sideways? There's a number of them, Todd. Yeah, there's a number of good ones that'll work trending and sideways. Weibo is probably a really good one, although it's not as good in oscillating markets. What you could do is if you're looking for more trending trades and you only want to trade a trending system, trade it on smaller time frames because they're going to have more trends inside of that in a day. And so that can help you with that. Yeah, it's a good question. Smaller time frames, you might go to a volume chart and size down. That'll give you better setups on trending too. Is it possible to put out a standard best practice approach to doing each optimization? Yeah, there's some rules that you can kind of live by, right? You know, there's 2 different approaches to optimizing too, guys. I go off of start wide and then narrow. That's my approach. But I'm also going back and forth to the chart to look at it to say, is this what I want it to do or not? The other option is you look at it small and expand out. That's the other approach. And neither of them are wrong. It's just a matter of what works for you. Again, it's the art form, not the science, but you can start small and then start to add more days to it and go, is this one still good? Okay, I'm going to look at that day and what happened on that day. Okay. And then go back a little further and back a little further. And what you're doing that way is you are optimizing more based on what is happening recently versus what happened a month ago. Because what happened a month ago may be completely irrelevant. So yeah, so that's that approach, a little bit different. They manage the day trading rule using algos trading same stock. Yeah, you would be a pattern day trader if you're using it on stocks and trading multiple trades a week, right? So definitely going to have that come up. There are prop firms that will fund traders for stocks. So you would, you know, if you don't have the 25K minimum, then you can go into to a prop firm. Trade Funder funds stocks traders. So yeah, Trade Funder does. Any algo for CPI days? Yeah, it's the one that doesn't trade. One that doesn't trade. It's called you know, there's only losing algos. No, I don't know. Manage the day trading rule. The future sometimes. Yeah, let's go over divergence. Yeah, for sure. Opposing signals, probabilities. Not unlike you could use correlations, you know, where like if you're looking at, okay, if you're a trend trader, and this is actually a really great idea, good concept. If you're a trend trader and you have a trending system, let's say you're thrust breakout, right? What's the strongest market for the day? You've got YM, you've got NQ, ES, RTY as your, your markets. Which one is the strongest? Traded on that market that day. You might have one template for each one, and NQ is the big gainer for the day. Run it on NQ. The next day, RTY might be, the strongest to the short side. Okay, you traded on RTY that day. So you can certainly use correlations as a factor on trending systems. You can also use it for oscillating. If there's not much, if it's an inside day and it's not really doing much, put it on an oscillating system. Any idea on bar close versus central bar? No, you'd have to optimize it and see what works for you. Yeah, high win rates, the more the better for sure. Which algos for ranging? Yeah, let's look at it. There's so many, it's hard to, let's look at it. Remind me to go over the VM system while we're waiting on this. We'll take a few extra minutes to cover it. We will go over it more on the brain training. What is going on with my window? There it is. Okay, let's go over the algos. Yeah, you're welcome. Yeah, thanks for hanging out, Jeffrey. Have a great day. Have a good night and a good tomorrow. What to look for in a chart? Yeah, for sure. We can go over that too. Okay, ATR is reversals or trends. Alpha price, probably going to be mostly trending. Engulfing, you could use for trending or reversals based on how you set it. I like it. I like it for both, actually, to be honest with you. CWAP is a trend system, 100%. Inside bar, outside is kind of a trend system as well. Matrix, mostly reversals. You could use it for trend pullbacks. So a lot of these that are, they're either going to be reversals or pullbacks, the ones that are reversals. So this would be a reversal, quote unquote. Ready, set. I like it as a reversal. I like it better as a reversal, actually. Springboard too. Like it better as a reversal. Thrust breakout, definitely trending because it's a breakout algo. Weibo, you can get away with trading it on oscillating days. It's gonna not be as good though. Delta, HFT, you can use it for both trending or pullbacks or breakouts for that matter. It's order flow. You can use order flow for anything. Auto fib, it's going to be a bounce trade. That would be a good one for oscillating. Unizones can be good for oscillating. You can do it for any of these that are oscillating or reversals. Like I say, you can use them for trends. Hybrid, it's a great reversal algo. We're going to look at that one later in the week. Volume divergence, to me, again, either one, but mostly reversals. Trend stepper, trending, obviously. Pattern finder is a breakout system. So, you probably want to do trending on that, but you can also do a breakout out of a location as a reversal in a new direction. And then VWAP, VWAPer, yeah, either one, trending or reversals. So a lot of them you can go both ways. So it's just a matter of, programming it to do what you want it to do. All right, let's go over divergence real quick, and then we're going to wrap up. Chart. Let me get a new. Actually, do I have a chart open? Maybe. Yeah, here we go. Seriously. There it goes. Okay. Rats. Three days ain't too bad. Hopefully this doesn't like freak out on me here. Yeah, too many ice cream flavors. Yeah, this is like Baskin Robbins. 31 flavors. Here's my suggestion on algos. There's a lot of them that do a lot of different things. Some of them are easier to work with than others. And let me re-enable the algo actually. Become a master at like 2 to 3 algos. Become a master at it, because that's what's going to make you the most money. If you're spread too thin, then you've heard jack of all trades, master of none, right? So, just keep that in mind. Okay, let's find some very easy to see divergence, and we'll go through it. I'll try to find the simplest one to start off with so that it is easy. There we go. This is a good one. Okay, so what is divergence? Higher high in price, lower high in momentum. Okay, take a screenshot of that. Higher high in price, lower high in momentum. That is divergence. Okay. Divergence is saying that the momentum on the up move was not as strong as the momentum on the previous move. Each time that up move weakens, that's a sign that there's profit taking and there's a possibility that a market rotation is coming in. Okay, let's look at this one. Is this divergence? Lower high, equal high. Technically, that's divergence as well. Let's look at it from the other side. Yeah, it's not very strong divergence. You do want to see higher high, lower high, that kind of thing. This is divergence. Now, it doesn't respond like the other one did, but higher high in higher low. Yes, higher low. I'm losing it. Higher low in momentum, lower low in price. That is divergence as well. Again, this one didn't follow through, but it still gave a pretty deep pullback off of that divergence. The point is, should you be trading short into this? Probably not. Yeah, exactly. Let's take a look. Find a couple more. Okay. Here. How do you know you're getting divergence? Anytime you're making a higher high, let's go to the hard right edge, because looking at it in hindsight is one thing. Seeing it in real time is another. Okay, so you got above this, right? And at that point, what you're doing is you can look at it this way too, and I've actually done this before. Have we made a higher high in momentum? No, but we're making higher highs in price. So there's no longs in there. In fact, when you get a break coming out of divergence, that's your sign that you're wanting a short. Again, this one didn't follow through like that, but you can see there's divergence the whole way up to the top. Sorry, this thing is like not working with me here because it's running the back test. Very clear divergence. Very, very clear. So could you trade an algo out of divergence? There's a number of them you could trade out of divergence. One of them is springboard. Low, higher low, higher low, higher low, break, springboard, money on the table. You could use engulfing algo out of divergence. Let's go back to one of our divergence here. Engulfing right here. That's an engulfing signal. Now, this one didn't work. We've already gone over the fact that there wasn't much of a response here, but that's an engulfing signal right here. And depending on where you put your stop, you wouldn't have hit target anyway, so it wouldn't have been a winning trade, but you can use engulfing. What about inside bar, outside bar? You could use those. this would be a ready set signal. Actually, no. If it had closed inside here, that would have been a ready set. You could use ready set. So this is when we're gonna talk about location-based deployment. That's what we mean by that. Are we coming into resistance or support or divergence? So let's look at an example. Come on now. All right. So we're looking at what broke the high here, right? That's our high. The lows that cause that is down here. So the assumption is if we get down to these lows again, we're going to get support. Okay, so we come down in here, lo and behold, we have support. You've got springboard, which would trigger right here. There's a winning trade. Okay, you've got, technically could have gotten ready set. This one is an inside bar, so there's a trade right there. Would have triggered an inside bar. You've got an engulfing right here. That would have triggered there. So there's a number of different, different algos that you can use out of these locations. If I was trading the price action algos, namely the springboard, the ready set, the iBob, the, matrix, there's engulfing, all of those, location-based. Because the signal itself is good, but when you pair it with divergence or support resistance, good night, look out. It's going to be lethal. They're so good. So good. And you guys heard me rant about that in the engulfing, I think. Or maybe I did that in the trade room. I can't remember. But... Cool. So does that help? That give you some insight? Momentum pros. All right. So this is our result. 55, 40, 60. So 60 is good for the pullback. I'm happy with that. Narrow range, actually tightening it up was better. So you could do that. And then the ERC, the body, yeah, I would say I'm not going to restrict it to be 55. I'll just leave it at 50. And that's fine. And then entry offset, we could optimize that separately and stuff. I'll work on this a little bit, maybe while I'm eating lunch or something. I'll mess with it and see if I come up with anything good. But I think that's going to do it for today. We've covered a lot. We went about a half an hour extra. Yeah, I think we're good. Yeah, iBob is in the, if you just go to the ARC store, you'll see it in there. So I forgot I left my AC like way up. I'm like, it's kind of warm in here. It's 77 in my office right now. I'm like, I wonder why I'm starting to get hot. Oh yeah, because I turned the AC up over the weekend. That's why. Super. It just kicked on. 77 degrees outside. Oh. Cool deal.
Hey, Jim, I just want to let everyone know that I posted 2 templates in the ATRV channel on Discord, and
Yeah.
I'm getting ready to post a thrust breakout from one of our ambassadors in the thrust breakout Discord channel.
Awesome. If I find anything good on this one, I'll send it out to you guys as well. But that kind of covers us there. So, like I say, with this one, very, very trending is what you're looking for. You want to trade it as a trending system for sure. So, yeah, this is the longest I've ever talked in my entire life. Maybe not. I don't know.
You only have 4 more days of this.
Oh my God. I'm gonna go buy some like Ricola. I'm gonna buy stock in Ricola, something like that. Need some cough drops. Get my voice going. All right, guys. Cool. We'll be back tomorrow. If you have any questions, support is going to be the best outlet for you to get some answers to your questions. If it needs, if it's trading based, they'll probably send it to me. But yeah, most of the stuff they can answer for you. They got you covered. So good deal. All right, guys. Go have fun testing systems and see what you can come up with. Yeah. we'll see you back here tomorrow. Adios. Take care, everybody. Cheers.
See you guys later.